Hi, good morning, and welcome to day 2 of our gold value chain discussion. Today we'll focus on detailed technical discussions related to the extraction and processing of gold and other precious metals. We're going to start with a presentation by Joe Hinzer from WGM on the interpretation of geological data and reporting of resources per National Instrument 43101, and he'll go into some of the exploration programs and challenges associated with project development. Following that, Roy Slack from Cementation will talk about mining methods of mine development. That includes open pit mining and as well as underground shaft drifts and raises. Moving then to ore types, we have Chris Fleming from SGS, who's going to talk about various ore types, gold ore types, including placer gold, refractory sulfides such as pyrite, arsenopyrite, and pyrrhotite, as well as complex polymetallic sulfides, energite and chalcopyrite. We'll then break for about 30 minutes for a discussion and question and answers with the participants, and then we'll move into processing of gold. Starting with primary processing of gold, we have Peter Lind from Eldorado Gold, who will talk about the main processing methods such as comminution or crushing, screening, and milling, gravity separation of placer gold, cyanide extraction of disseminated gold, and pressure oxidation of refractory sulfides. I'll talk a little bit about the removal and recovery of copper and gold from polymetallic minerals, as well as treatment of arsenic. So we focus on copper and other critical metals recovery, the economic value, and the economics of that recovery. Then we're back to Peter again, who will talk about precious metal recovery and the various ways of achieving that through either carbon and leach or carbon and pulp, the Zadra ADR process, and the Merrill-Crowe process. We'll then move on to tailings and residue management. This will be presented by Rafael Davila of Hatch. Rafael will speak about CIL, CIP tailings neutralization and thickening, conventional tailings and effluent impoundment, and something, of course, that's very, a topic of conversation now is tailings filtration and dry stacking. Moving then to effluent treatment, Nolene Ahern from SGS Natural Resources will speak about solution neutralization and residual metal precipitation, cyanide destruction, and zero effluent discharge. And we will finish the session with refining and recycling of gold by Bikram Abrahamian from the Royal Canadian Mint, again followed by about half an hour for questions, Q&A, questions and comments, and then we'll wrap up the day with some closing comments from Boyd Davis. Thank you for joining us.
Good morning or good afternoon or whatever time it is where you are. My name is Joe Hinzer. I've been working as an exploration geologist since 1971, and the last 20 years as president of Watts Griffiths McEwitt, an international consulting firm. And half of my working life has been spent looking for mineral deposits, and the other half has been spent assessing mineral deposits all over the world. North America, Africa, Asia, South America, and most recently I've been working on international arbitration cases. All of this work involves helping clients, investors, stakeholders, and all of the people associated with the process, gaining a better understanding of the mining process, the project, the nature of the project, and all of the associated issues. The biggest thing I find is that there is risk in all of types of investment, and understanding the risk is very important. And the first step in understanding the risk is understanding your own individual personal risk tolerance. And just to frame this, it takes an average of a few years to bring a recent alluvial deposit into production or a placer deposit into production, whereas a hard rock deposit can take upwards of 10 years, and some of the deposits have been around for 40 or 50 years before they've been brought into production. So understanding your own individual risk tolerance and timeline is the first step in any project assessment process. You also need to familiarize yourself with all of the available information that's out there for you to use, whether it's technical reports, management discussion and analysis, annual reports, financial statements. You should also familiarize yourself with the CIM definitions and best practice guidelines, the reporting codes, the requirements that companies must submit, and rely on independent, first of all, qualified persons, and then secondly, independent qualified people, because their ethical requirements are that they need to report what is required by these various codes. In addition to that, understand your basic deposit types, how the deposits are formed, how they need to be explored, and what are good methods and how to analyze and assess these. To understand the geology, the mineralization, the terminology used, and then to understand mineral resources and eventually mineral reserves. As I mentioned, this could be a timely process. Here is an example of the various stages that you need to go through. You do your initial research for target selection. You conduct a regional exploration program, a detailed program, a drilling program to define a resource. You outline your resource. You then do feasibility or various levels of feasibility study, and eventually you bring the project to the mining stage. As you go through this process, the risk is reduced, the cost is increased. So let's look a little more detailed as risk assessment tools. For early stage projects, and basically for all projects, CIM best practice guidelines are one of the best tools you have to compare what's being reported in the news releases to what should be done. The JORC reporting code from Australia has something called a Table 1, which is basically very similar to the best practices guidelines. It's a step-by-step, almost like a cookbook, follow this and do this and follow this and do that. This really is a really good tool to compare what the company is reporting and what it needs to report. Check to see if a company QP has signed off on the news release. Look at other websites out there. There are a number of websites which give guidelines on how to interpret the data, whether it's Mining 101 or Exploration 101. As the project advances, independent and qualified technical reports are important. An early stage review of a project will do a preliminary economic assessment to see whether there's any potential. That will often be followed by various levels of feasibility studies, pre-feasibility, and later on a feasibility study. Evaluations will be undertaken. And at this stage of a project, analysts who are looking to invest in the project become involved, and they will prepare analyst reports and project coverage which give you a good idea of the advancement of the project. And of course, at production stage projects, you have the annual reports prepared by the company that update you on what's happening, management discussion and results of what they expect to be doing and how they're succeeding, audited financial statements, and of course, quarterly reports that update you on the next stages. So, having looked at the available tools, let's look at gold deposits. So, the easiest gold deposit to mine, and the ones that everybody's probably familiar with, are placer deposits. These are the stream samples, stream sediments, recent stream sediments that you see in Alaska or BC, a lot of places in South America. where river systems contain gold, and these are being mined by people. Although they are relatively easy to find and quick to bring into production, they are limited in size. They have a checkered environmental history. They can be very productive if properly managed and operated. But surprisingly, there are not many of these as listed companies because of the difficulties of compliance with the regulatory process, just because of the natures of these deposits. Paleoplacer deposits are the large deposits that you have in South Africa. And I'll just advance a little bit here. Again, these are the modern day, the upper two pictures are the modern day placer deposits. They can be either mined manually or with dredges or anything in between. Once you get into the paleoplacers, you can see here the gold distribution. This picture happens to be from a gold mine in Tarkwa. But these are very, very similar to what was in South Africa. Pardon me, the lower picture here. Each of these orange areas on the slide show basically deltas that had formed from sedimentary deposits earlier on. And when the gold was eroded, it ended up in the deltas, and it sort of ended up in some sort of an environment that looks like this. These can be the South African paleoplacers have been very, very lucrative. And they've been mined down from surface to as much as 12 kilometers. And of course, there are huge challenges mining at that depth. But other than these paleoplacers, the modern day placers are still a difficult class to mine. On the other side, we have hard rock deposits. In general, these hard rock deposits have many sources. The greenstone belts that we are familiar with, they're stretching from Val d'Or to Timmins in northern Ontario and Quebec. We have similar types of deposits in West Africa and South America, the Birimian deposits. There are also a number of other deposits which were formed at earlier stages and at less depth in the earth. These are the kind of deposits that are associated with the Carlin-style mineralization, where you have intrusive rocks and their dikes that distribute, that remobilize groundwater in the surrounding rocks and remobilize and remineralization into deposits, which can be very lucrative. And as we've seen from Carlin, from the Carlin district, generally lower grade, but of fairly extensive size. And the more recent epithermal type of deposits, which are younger volcanic terrains or hot spring areas, where you have a lot of fluid movement through near surface rocks, and depending on the amount of sulfides present in the rock, we get low sulfidation or high sulfidation deposits. So this is a really good slide available from the Canadian government that shows you the various different styles of mineralization and where within the system they are found. And also it gives you an idea of the type of exploration that would be most useful in defining them. What different types of exploration can be utilized? So different deposits, as we've seen from the previous slide, require different exploration techniques. So understanding the geological setting is key to applying the correct techniques. And when you look at news releases or presentations, it is very, very important to understand whether the reporting person or the people that report the information understand the geology and are doing this very well. The other wrinkle that comes into this is in northern climates, there's very often glacial coverage, or as we have in northern Canada, lots of glacial sedimentation and lots of swampy areas. So exploration in these areas, direct examination of the rocks is not possible. So different exploration techniques need to be undertaken to see below the glacial sediments or the swamps, and often these are geophysical techniques. In tropical environments, the wrinkle is that the top 5 to 40 meters are extensively weathered. And this lateritic and saprolitic cover creates exploration problems because the results that you see at surface may not continue at depth. Mineralization may be remobilized and repositioned elsewhere. And when you're mining, although the surface oxidized material or weathered material is easy to mine, once you get below this, the rock gets harder and the gold gets much more difficult to extract and much more expensive to extract. And this often creates issues with the process as well. When you're looking at the exploration techniques and the information that's reported, the key words to look out for: is the QP involved? Is the location well noted? Where is the deposit? What is the geological setting and mineralization? Is it well understood? What about the gold grades? Have the First Nations or Indigenous people been consulted? Is the permitting all in place? Just as an example, one of my associates or colleagues, rather, made an interesting observation that when a news release focuses on telling you about the high grades and very little else, maybe it's the investor that's being mined and not the deposit. A good news release should tell you information about the geology, the setting, the location and access, the mineralization style, and as well as the grade. So getting all your information correct is really important. So for early stage projects, you need to also check whether or not the company has a suitable budget. Do they have the money to do the work? This is a very important. Have they compiled all the historical data? Do they have a realistic sampling program? Do they have a good sampling program, whether it's rock or soil or stream sediment? Even plant sampling is important. Satellite imagery, airborne geophysical data, all of these things are important to help define targets. And successful exploration will often involve geophysical surveys as well. And once a target has been defined, has the company identified good drill targets, and are they using the right type of drilling techniques? And we'll touch on that just a little bit later. So when you look at advanced projects, again, technical reports are a real key, and CIM definitions. And for identifying the resource, and an independent QP's report is something to look out for. Key points to keep an eye open are geological interpretations. Do they have a reasonable or good interpretation? Is the mineralization continuous? And what kind of cutoff grades there are? And we'll speak about cutoff grades in a few minutes. And then the metallurgical type, whether it's free gold or requires different treatment methods. Is the gold refractory? Many times gold is incorporated inside other minerals and is very difficult to recover. And reconciliation. Does the company, what has the company recovered versus what they expected to recover? These are really important things to look out for. So just a quick review of deposit types. Low-grade deposits are generally mined by open pit, and they can have a grade of anywhere from 0.4 grams to 3 grams of gold per ton. Higher grade deposits are generally mined underground, and they generally range more than 3 grams a ton, and they average somewhere around 10 and could be much higher than 10. And the economic factors that determine what is going to be mined, of course, is the cutoff grade. Let's look at mineral resources very quickly. By definition, a public listed company, by code, listed company must have an independent qualified person do an initial mineral resource. Once a resource has been defined, whether it's a high quality measured, medium quality indicated, or low quality inferred resource, it's deemed to have a potential to be mined. However, to get to a reserve stage, only measured and indicated resources are acceptable because it's believed that inferred mineral resources require much more work to bring them to an indicated or measured stage before they can be used to make economic decisions. Modifying factors are those factors that are required to be applied to get to a reserve stage. And this includes knowing the mining costs, the processing, the metallurgy, the infrastructure requirements, all of the economic factors, the marketing, the legal environment, social and government factors. These are all required to be understood before you can call it a reserve. And I just like to point out one other wrinkle in this particular case. When you're dealing with alluvial deposits, everything is reported on a per volume basis because what you do basically is you sample a volume of rock, and out of that volume of rock you extract what minerals are there, and these minerals are then reported as either grams or milligrams of gold per cubic meter or per cubic yard. For hard rock deposits or all other deposits, once the sample is analyzed, generally drill core or samples, these are cut in half is sent to the lab, half is kept for reference. And this data is usually reported in grams per ton or ounces per ton. And that's the basis then that's used for the mineral resource estimates. Drilling, basically diamond core drilling is the most common, is the most high quality system you can use. For a lot of the deposits in saprolitic or laterite environments, reverse circulation or reverse air blast drilling is used. These techniques are much less expensive to apply. The downside is that because they don't deliver drill core per se, they deliver cuttings, whether they're blown up by air or returned by reverse circulation process. And these cuttings don't necessarily represent the exact interval that was sampled, and they may be contaminated by adjacent sections. People with a lot of experience in reverse circulation drilling believe the system is quite good. Most prudent operators, however, will drill a few representative diamond drill holes, even though most of the drilling is RC, just to confirm the placement and location of the mineralization as a quality assurance process. So let's quickly look at mineral resources. The data has been put together from your drilling program, and you can see some drill hole traces here. And the geologist identified, based on an estimate of 1.5 grams, a zone that is mineralized and that can be potentially mined. And within that zone, we have these reported blocks. So what happens with these blocks is, let's assume a block is 1 ton, and that 1 ton has a grade of 3 grams of gold based on our analysis. So at an assumed gold price of $1,000 an ounce, we divide this by 31 to get it down to grams. And we see the gram of gold has a price of $32 per gram. This block has 3 grams, so therefore the value of this block is $96. So we then go to the next step. Our mining costs, we have overburden removal costs of 13, mining costs of 4, treatment of 21, administrative costs of 9, giving us a total cost of $47 to remove this 1 ton of rock. And from that, we recover 90% of the gold. So, simple calculation, we take the $47, we divide it by the recovery, which in this case is 95%, and we could then divide that total by the unit cost of gold, and that gives us 1.5 grams. So, if the mineral block has 1.5 grams, it can be mined economically. If it's 3 grams, we're making a bit of money on this. So that's basically how this works, very simply. And I'm sure when we get to the engineering section, the more detail will be presented on this. So I'd just like to summarize it very, very quickly to summarize some of the things that we look for when we invest. In greenfields, you want to make sure that all existing data has been reviewed before commencing a detailed work program, and that the work program follows is targeted based on the type of mineralization they've encountered in the environment. For brownfield sites, you want to make sure that the new concept or idea that's being proposed makes sense. Generally, people will look for parallel zones, deeper zones, new targets, or perhaps recovering the tailings. And the right type of exploration requirements should be well explained. For existing operations, you want to make sure that the company is doing continued exploration, because that's the only thing that will sustain an operation. And this continued exploration should look again for parallel zones, deeper zones, new targets, or extension of existing targets. In the interest of time and leaving room for others to explain things, I thank you very much, and hopefully this has been helpful in helping you understand how to assess mineral deposits. Thank you very much. Bye.
Well, my first thought about condensing 40-some years of mine building into 10 minutes of advice on investing was it would be a bit of a challenge, to say the least. But I took a different approach here. I decided not to approach this as a mining engineer, but as a somewhat successful investor with maybe more knowledge about mining than the average investor. Maybe not. That'll be for you to judge after these 10 minutes. During most of my career, I made my money the old-fashioned way. But about 7 years ago, I started investing in the mining industry, and it was one investment per year. And I wanted to give you some insight into my approach, which isn't that technical, actually. The World Gold Council will be happy to note all of my investments have been in gold companies. My wife was happy to note that all of my investments have been successful so far. All of my investments have been in companies that were mine building. Some were in production in other locations, but all were building mines. And this makes sense to me. It's based on my background, my experience. That's my career as a mine builder. And I can gauge to some extent projects that seem achievable versus projects that are aggressively over-optimistic. And my first measure of a company or a project, it isn't technical at all. It's all about the people involved. The board, executive, management. We'll start with the board, and they may not have a great deal of influence when it comes to project success, but what I find is good people tend to attach themselves to good companies and good projects. As far as executives go, they certainly need to be knowledgeable, that's a given. But in addition to all their other skills, the ones that are focused on safety and their people are the ones who really understand how things work, in my opinion. And that's key to attracting and retaining the team and building relationships with various stakeholders. Management, they're generating the forecasts, the guidance, the estimates, and mine management, the people on site are the ones who have to get it done. Because I've been in mining a long time, I know a lot of people in the industry. There's lots of characters, but do they have character? That's the important question. I look for people that have a track record of doing the things they say they'll do. And past success is usually a good gauge of future success. Certainly timing for investing is important. Lots of people can advise you on this far better than I can. My own approach, I like to be able to evaluate the way a project is started, how it's being presented, and the groups that are involved, including engineers, EPCM groups, contractors, indigenous companies. So I usually buy in shortly after a project has been given board approval and has funding in place. Perhaps construction started, but almost always past permitting and IBA stage. Probably not the best time in terms of maximizing returns, but it gives me a level of comfort. And the analysts will have an opinion on where the share price is going, and that's another level of comfort as well. Capital projects in mine development, whether open pit or underground, continue to be a challenging prospect. Many feasibility studies focus on optimizing net present value to gain board approval, and that puts pressure on management to provide an aggressive schedule and estimate. From a technical perspective, I look at schedule. Certainly, it's so important, and I determine if they've used reasonable time periods for different blocks in the schedule, time to permit, surface construction. I look at development rates because that's my background, and then commissioning and ramp up to production. Schedules are often far too detailed to analyze, but taking it in blocks, sometimes you can recognize if something is too aggressive. Project costs and operating costs are a very hard thing to evaluate, even if you're an expert and have all the information. For an operating mine, there's usually historical operating costs that can be used as a baseline. For capital costs, based on my experience, I do look at them in a general perspective. And sometimes I can red flag certain items that traditionally go over budget or take longer than expected. But once again, I like to look at the people involved, who did the studies, who's leading the project, who's on the board or executive team evaluating and improving, and what's their track record. Cost overruns are not new, and they're not limited to the mining industry. One study looked at major infrastructure projects over the past 70 years and consistent overruns averaging 28%. From a capital cost perspective, what shape will the project be in if it overruns on cost or time? For majors, it's a risk, but they can often afford to bring in a project regardless of overruns. For juniors that are greatly leveraged, this is a real risk. For a junior to go out for additional funding late in a project, they are not in a strong negotiating position, to say the least. Overruns inflate capital, but onerous funding terms end up inflating operating costs. It's a double whammy. Funding's important. Mine planning. I remember visiting Windsor Salt many years ago, and the chief engineer was a friend of mine, and I said, "What's the mine plan?" And he said, "We go that way for 50 years. Gold mining, not as straightforward." I was involved in sinking the Lac Shaft, which became Williams Mine, and at 6,000 tons per day, it was one of the largest tonnage underground gold mines in North America at the time. Today, larger tonnages are typical as we deal with varying grades and trying to improve net present value through production rates. First consideration for mine planning once a resource has been identified is, will it be open pit or underground? An open pit has a great many advantages, certainly quicker access to the ore body, lower operating cost, but depending on jurisdiction, there could be some disadvantages too. Often a property will utilize both methods, open pit and underground. And for going underground, the access option is a key decision, ramp versus shaft. Certainly the mining method, there are different mining methods, and the ore body dictates that to some extent. Many of these decisions are a trade-off between capital and operating cost. Capital is more sensitive to net present value, so it often is the driver. Lots of key considerations for any mine plan, but a few to pay attention to are the location of the mine and the social license. So when I say location, I talk about a geopolitical risk, but also the environment, the community who's involved, and the challenges with a remote project. Generated power, no road access, all drive up costs. Grade. We all love high grade. And high grade mines are usually, they can usually cover some sins of the past, put it that way. But lower grade mines that are efficient are often profitable as well. Operating costs, need to look at those. I like to look at tons per day and see whether the reserve and the mining method will support the projected tons per day. Because once those tons per day drop, indirect costs go up in general, in conclusion, my personal guidelines for investing, and I'm a medium risk investor, but they include a project that's in or near production. I focus on the people. I need to see good people involved, good companies involved, whether they're consultants, contractors, all of those people and groups, a history of doing what they say they'll do. I try to buy in at a reasonable share price historically. Don't necessarily go for a bottom price, but I try to avoid the top. And from a technical perspective, a project that makes sense in terms of location, social license, the grade, tons per day, and that funding element, which is so important. Not technical, but you have to consider it. And as a final comment, if you aren't sure, ask. I've been in the industry for a long time, and I still ask more questions than I answer. Thank you for your attention.
Good morning. My name is Chris Fleming. I'm a consulting metallurgist with SGS Minerals, and the title of my talk is The Influence of Technology Advances and the Gold Price on Gold Production Trends. And the first slide is a snapshot of gold production throughout history, and it tells the story that I want to convey today. On the vertical axis is the cumulative gold production by man, and it's believed to be just over 225,000 tons to date. And on the horizontal axis is the time frame. Now, man has been mining gold or recovering gold and processing it for over 4,000 years, but very little is known about production trends for the first 3,500 years. So my time frame really has been condensed down into the last 500 years or so. From 1490 onwards, records were kept. And so the bottom left-hand portion of this curve shows the period from 1490 to 1900. And in that period, around 15,000 tons of gold was accumulated, which works out to a linear average of 35 tons per annum. Almost all of this gold was recovered by gravity separation, because that was the only technique that was known to man at that time. And the equipment they used was very crude. They had sluice boxes, panning machines of various design, but recovery efficiency was very low, typically less than 10%. So only the highest grade deposits could be found and processed. The first real change in this trend took place around about 1900, as indicated by that first kink in the graph. And that change took place as a result of a technological innovation, and that was the development of the sonidation process. In the late 1890s, the sonidation process was patented, and from about 1900 onwards, the process started finding its way into the gold industry quite rapidly. And the main reason it had such an impact was that it was extremely efficient. It recovered not only coarse gold particles, but all the gold down to the finest particle sizes. So recovery efficiencies went from less than 10% to well over 90%. And as a result, the grade of gold ore that could be economically treated came right down. I believe an average over this next 60 or 70 year period of the feed grade to a mine would have been in the 5 to 10 gram per ton range. And in that period, another 60,000 tons of gold was added to the above ground inventory for an average of about 860 tons per year. So very dramatic effect that this new technology had on production around the world. The next kink in the curve and significant change in production trends took place in the late 1960s. And this happened not as a result of a technological innovation, but as a result of an increase in the gold price. Up until 1968, the gold price was controlled at $35 an ounce, 35 US dollars an ounce. This was brought in by the US government, by the Federal Reserve, as a measure to control rampant inflation that was taking place after the Great Depression in the 1930s. And by fixing the paper currency of US dollars to physical amounts of gold, they were able to control the printing of paper money. And this was fine for the first part of the 20th century. But by the 1950s and 1960s, that price was no longer tenable for most gold mining operations around the world, and gold mining operations were closing down. In fact, the only countries that continued to produce gold in the 60s, 50s and 60s was South Africa, and to a lesser extent Russia. And they were able to do so by government decision to reduce the value of their currency to keep people working, basically. But by 1968, the US government realized that a $35 an ounce price was no longer sustainable, and they released the gold price from that constraint and allowed it to drift in response to normal market forces of supply and demand. And it drifted upwards very rapidly. It was in the hundreds of dollars within a few months and over $1,000 within a year. And that led to this huge increase in production from 1970 onwards. In the period from 1970 to the current time, we've produced another 150,000 tons of gold, which when added to the other two periods accounts for the 225,000 tons that we have in inventory above ground. So whilst it was a increase in the price of gold that led to that dramatic increase, there was also significant new technology developed in that period. These new technologies were enabled by the higher gold price, but they were driven by a change in geology and mineralogy, and notably the easily found, easily processable gold deposits. These were oxide gold deposits close to the surface, were rapidly becoming depleted around the world. And in order to continue producing at the rate they were producing, exploration companies had to dig deeper and deeper into the Earth's crust to find gold, sometimes down kilometers below the Earth's surface. And they were certainly finding gold, they were finding lots of it, but most of these deposits, or many of these deposits, did not respond well to the cyanidation process. And the reason for that was the gold in these deep deposits was very fine, dumped down to submicron in size, and completely encapsulated within another mineral. That other mineral is typically a sulfide mineral like pyrite or arsenopyrite that itself was impervious to the cyanidation process. So the only way you could get at the gold was by first oxidizing, breaking down the host mineral. So in the 60s and 70s, new technologies such as roasting, pressure leaching, bacterial leaching were developed and rapidly rolled out into the mining industry as more and more of the new gold discoveries fell into this category. Also in this period, 70s and 80s, new technologies such as heap leaching and carbon and leach became more and more common in the gold mining industry, and these lowered the feed grades that could be economically treated. And through this period, the last 40 or 50 years, economical feed grades to gold mines has dropped down to 1 to 3 grams per ton, and in the case of heap leaching, down to less than half a gram per ton. So huge new resources opened up around the world as a result of this combination of the increased gold price and technology advances. So let's look at today's supply of gold from the mining industry. So annual gold production increased rapidly every year from 1970 to 2000, but it's leveled off at around 3,200 tons per annum for the last 25 years. This is equivalent to 110 million ounces per year, and the significance of that number will become apparent. Why has gold production leveled off in the last 20 odd years? Well, the main reason is easy to find and process gold has mostly been mined out. As I mentioned, new discoveries are either small or they're deep in the ground and refractory. A contributing factor is that gold exploration budgets have declined, and they've declined sharply since the last boom cycle, which ended in about 2012. As a result of these two factors, cumulative new gold discoveries have declined almost 80%. From greater than 120 million ounces in the 1990s to less than 20 million ounces for the last 10 years or so. As you can imagine, if we are mining over 100 million ounces per year and finding less than 20 million ounces per year, we are replacing less than 20% of the gold that we mine each year. And our inventory of gold below the ground yet to be mined is obviously decreasing rapidly. Because they are unable to replace their reserves with new discoveries, the major gold mining companies are adding to their reserves via acquisitions, and there have been several in recent years. The most recent being the acquisition of Newcrest by Newmont. This obviously does nothing to replenish the global gold supply under the ground. This just shows graphically that story I've just told. This is a graph, statistics that are brought out by the World Gold Council from time to time. This was in 2015. It shows in the brown bars the cumulative, the individual gold discoveries each year, and that the number is shown in the vertical axis on the left-hand side, and you can see it peaked in 95, 96 at 130 million ounces or so, but declined sharply after that, hitting a trough in 2001 and 2002 of 30 or 40 million ounces. There was another rally in the last boom cycle where we got up to just over 90 million ounces per annum, but it's been in sharp decline ever since. The black line shows the expenditure by gold mining companies and exploration companies looking for new gold deposits, and that's shown in the vertical axis on the right-hand side. And that peaked in towards the end of the last boom cycle at about $6 billion US. Significantly, though, despite the highest expenditure in any one year, there was not a commensurate increase in discoveries in the year 2012. This just updates that last graph. This was brought out earlier this year by the World Gold Council. And I just wanted to highlight the right-hand side of this curve, which shows that really from 2012, apart from a couple of good years, gold discoveries has been less than 20 million ounces a year. The black line shows that we've sort of steadied out at between $4 and $6 billion a year expenditure. So the gold industry is producing 3,200 tons per annum of new gold coming to the surface, but this is less than 2% of the known above ground gold reserves of 225,000 tons. This physical gold inventory is on the surface is mostly in the form of jewelry in private hands, about 60%, or gold bars, 30%. That's gold bars in central bank vaults. This places an enormous flywheel of supply, and it tends to have an upper cap on the gold price, because as soon as the gold price gets too high, jewelry hoarders become jewelry pawners. It's interesting that demand for gold has been greater than 4,000 tons per annum since the 1990s, which is 1,000 tons per annum greater than mine production. If it were any other commodity, the price of the commodity would have increased dramatically, or the production would have increased. But neither of these has happened, simply because the shortfall is very easily made up each year by the recycling of jewelry or scrap. The perception that future gold supply depends on new gold discoveries and new gold production from the mining industry underpins the lower end of the gold price. But it is a perception rather than a reality, because as this making up of 1,000 tons per annum for the last 20-odd years has shown, it's much easier to recycle jewelry and gold bars back into the supply side of the industry than it is to mine them at low grades, kilometers below the Earth's surface. So there's a fairly grim picture of discoveries over the last 20 years or so. The good news is that there are very sophisticated techniques available to geologists now for discovering new deposits well below the surface of the Earth, up to 1 kilometer or more below the surface of the Earth, with satellite imaging. And there's still vast portions of the Earth's surface that have not been explored with this technology. So I have no doubt that big new discoveries will be made in the future, but these will have to be big. They'll have to be tens of millions of ounces to be worth processing and to have any impact on this production if we wish to maintain it at about 100 million ounces per annum. Thank you.
Thank you very much to Joe Heinzer, Roy Slack, and also Chris Fleming there. There's a little bit of information there for everyone of all levels, I think. Also, can I just remind people who have joined us if you look down the bottom right of your screen, there's a questions tab. You click that, you can actually submit live questions to Joe, Roy, and Chris. We've had a few sent in already. And we've got Joe, just waiting for the other two. How are you, Joe?
Very good, thank you.
Good session. Really enjoyed that. Really enjoyed that.
Thank you.
Right, so I'm going to just sort of ask a question of each of you, and then we'll perhaps mix it up a bit. So, Joe, I'll just start with you. You made some really, really good points there. A question which comes up a lot, and statements that come up a lot from companies about the economic studies, the PEA, PFS, FS, DFS. Do companies need to go through all of those phases? Can they skip a couple? Or, we've even seen companies talk about getting into production after PEA. What are your feelings?
Well, I think you're correct in what you've seen. Some companies like to fast track the operation and skip right into production after a PEA. So there's no hard and fast rules that you need to go through the process of a pre-feasibility and a feasibility. Generally, for larger projects, it's almost necessary because you have so many moving parts. However, for the smaller operators, there is a tendency to try and get to the production stage much quicker. And of course, that increases risk. And this is something that investors have to be very careful about. Are they comfortable with the level of risk that they're being undertaken? And one other thing to add, I've done a lot of work in arbitration, international arbitration recently. And when you skip steps in the process or don't follow the procedures and your project goes sideways, then you also expose yourself to international arbitration risk.
Right, and Roy, you kind of went through some of your investment criteria. I guess that conversation around economic studies for you is really, really important because you want your management teams to not only build mines for, be successful, be winners, but not take shortcuts, presumably, even if they have been there, done it before.
Yeah, well, I really, first of all, I really enjoyed the presentation that Joe and Chris did. I hadn't seen them before, the presentations, so. And they validated my investment approach to some extent, because one of the things they talked about was your risk appetite. I think that's very important for any investor. I know it was important for me, and based on that, it kind of shaped the type of projects I invested in and the way I investigated them too. So yeah. So Joe, Chris, thank you for your presentations this morning.
You're welcome, Roy.
Yes, thanks.
And so, and Roy, just to answer the question, which was in terms of how the economic studies are important for you. Would you ever countenance backing an experienced management team who built before skipping any of these economic study phases?
Well, yeah. Sorry, absolutely not. And companies that skip steps, that says something about the company, quite honestly. And it's
something negative, presumably.
Yes, yeah. Sorry, yes, negative. The steps are there for a reason. Historically, we've seen when people have taken shortcuts, and occasionally there have been some big winners. But it's kind of like the casinos in Vegas. For every big winner, there's, I don't know how many losers there are. I don't have the statistics there, but when you start skipping steps, it just increases the risk. Simple as that. And I mean, if you're a high risk investor and you see something that looks good and they've skipped a lot of steps, well, maybe that's an investment for you. I don't know, but but any step that's skipped increases the risk of that investment.
Yeah, I think as Joe said, risk assessment and risk mitigation really important. And just to bring Chris in, Chris, again, great presentation. A reminder of what the gold sector is about. You mentioned jewelry. The gold ending up as jewelry or gold bars being put back into vaults. What are the other uses? We've got some industrial use. What else is there?
Yeah, the other uses, Matthew, come to 10-11% of annual production. So if we're producing 3,500 tons a year, let's say 350 to 400 tons end up in industrial uses. The main one, as you pointed out, being electronics, but there are a number of applications in the medical field, automotive, aerospace. There are a number of industrial applications where mostly the superb conductivity properties of gold, better than any other metal, find their way into industry. But it's quite a small percentage. The vast amount goes into jewelry, and most of that ends up in India, interestingly. And it's very traditional there. So while I sort of glibly said it's easy to recycle that back into the market, Indians tend not to sell their jewelry. It's very much part of their heritage and what they hand on to their children. So, but enormous reserves of jewelry, gold and jewelry in India.
Right. Okay. And I'm going to stick with you, Chris, because you said a few things which I'm sure Roy's eyes lit up, and mine did a bit. You're talking about shrinking discoveries and therefore production. Yeah. Is that a factor of? Well, you gave us a clue. You said there probably is gold to be discovered. So is that a factor of dwindling supply under the ground, or is it a factor of lack of investment over the past few years? Because that's clearly going to drive gold price up if there's a lot less of it.
Yeah, I showed you that one graph from the World Gold Council, which showed that the biggest expenditure ever on gold exploration was in 2012, and they found a pitiful 20 or 30 million ounces. So expenditure is not the most important factor right now. It's just a difficulty with making significant new discoveries. I'm personally amazed that we've been able to keep up this production of over 100 million ounces per annum since 2000, given the fact the known reserves underground are depleting so rapidly. And we've been able to do that by many new countries in the world becoming major gold producers. But they tend to be smaller deposits, smaller mines. China, for example, has become the biggest gold producer in the world. But unlike the discoveries of the Carlin Belt and the Witwatersrand, the Chinese mines tend to be small, but hundreds of them. How much longer you can carry on doing that, I'm not sure. As I said in my concluding remark, to keep up that production of 100 million ounces per year, there are going to have to be big deposits discovered. And they will likely be in remote parts of the world and likely be deep under the ground.
I'm sure there's quite a few. Well, the breakdown of that expenditure back in 2012 and currently, I guess, is going to be important, because I suspect there's a lot of public market, small junior exploration companies who would disagree with it slightly, because I don't think they're the beneficiaries. Perhaps the producers and the developers are. And if we're not finding it, it's going to be hard later on to produce it. So it's a difficult time out there. Joe, back to you. Can we talk a little bit about you covered a lot of ground there in terms of that risk assessment component. Just help me understand, when you're trying to categorize mineral resources, what I want to talk about, like, drill spacing. That seems to be sort of contentious issues. Some people like to do, tiny little step outs. Others like to really kind of reach out and go just that little bit further. So can you give us a bit of background on drill spacing?
Yeah, that's a good point. There are two things in the industry. There is a conception by a large group of people, and most of these are from the Asian part of the world and the East Bloc, and that is that those regulatory systems have sort of mandated spacings, so that if your drills are spaced so many meters apart or so many feet apart, then you can categorize mineral resources by certain quality levels. The reporting codes that are becoming more and more universal now, and I think there's 14 or 15 countries that have signed on to these codes, if not more, they all leave the decision for spacing up to the qualified person or competent person or whoever is the regulated professional. And that spacing then becomes how confident are you that the mineralization that you see in one drill hole continues to the next drill hole, so that you can join the 2 points together. And so there have been very many statistical techniques worked out to help with that. So it's not a matter of drill spacing of 50 to or 25 meters or 30 meters. In some cases, in order to get to the next point, you need your drill spacing as close as 12 or 13 meters. And in other cases, you're comfortable with 50 or 60 meters. So it's a site-specific assessment that has to be made by the professional.
Okay, and one other, just sticking with you, Joe, and this is definitely a contentious issue. I've seen headlines announcing discoveries with one drill hole. What's your opinion on what defines a discovery?
For different minerals and different commodities, there are different discovery questions. For example, one of the things we've seen recently is the look for lithium, and especially lithium brines. So if you drill one drill hole and tap into a pool of brine, then in effect you have a discovery very similar that you'd have with an oil well hitting. But for most other mineral commodities, hitting a target mineral of reasonable size and grade can be called a discovery, but it is certainly not a deposit by any stretch of the imagination.
Yeah. Right. Okay. Fair point. I think some of the headlines I saw referring to gold companies making statements like that, which I think is quite extraordinary. Okay, Roy, you kind of listed out quite a few of your investment criteria, and they all seem very, very logical. And I say you're probably higher up the risk curve than others would be. Other people looking for 10 baggers or whatever it is they feel they need. When you're assessing the management team, are you having to, in this current environment, cut them a little bit of slack when it comes to getting that CapEx and OpEx component right? You took about 28% overruns average. Are you seeing more error in this current environment?
I think, there's a saying that don't how does it go? Don't blame the player, blame the game. I think we have a real problem in our industry with how we evaluate projects and how we approve them at a board level. I'm on a few boards, and pressuring technical teams to increase net present value through optimization, which could mean cutting scope on the project. It could mean a number of things in terms of optimizing, pushing up the tons per day. All of these things, if they can be achieved, are great, but they all add risk to the project when you put that pressure on it. Again, I go back to my comment. I look for people that have been successful in the past, and not at the exploration stage that Joe or Chris are talking about, but at the project execution stage, which is my area of expertise. And there are people that have been successful over time. And sometimes if a project doesn't deliver on schedule, and there is a specific reason, or it doesn't deliver on cost due to inflation or some other things, I wouldn't say cutting it some slack. I tend not to use that word for obvious reasons, but it's just understanding the circumstances and evaluating people on their performance in companies, on their true performance. And I just want to add, I wanted to comment on your one question about a one-hole discovery. And many years ago, we were asked to drill hole number 17. And hole number 17 was down a raise in a very difficult area to get to. And it made no sense in the drilling program. But the expectation was it would be the highest grade hit. So it would be the discovery hole. So whenever, based on my experience, whenever I see a discovery hole, I take that with a grain of salt. So yeah, I don't know much about lithium, but like Joe said, if it's a one-hole discovery, I want to see a whole bunch more holes first.
Right, and Roy, sticking with you as well, like a conversation I had last year with somebody who actually funds the building of mines. He said he was looking at 35 different DFSs. He said 5 are fundable, 5 were going to be economic. That's not a very good hit rate. So what's your take when you're assessing these projects, given your experience, when you're looking at a new team that you perhaps have never invested with or before? What are the most common mistakes that stick out for you?
Well, human nature is that we are, when it comes to, I've got a saying, underestimation is underestimated. Human nature is that we're very optimistic when it comes to planning, when it comes to estimating. And that optimism is tempered over time by experience. And if you've got a group that is not experienced in project execution and delivery, and if you've got a board that doesn't have the experience there to evaluate and question and red flag certain things, often you'll see I won't say a crazy optimistic schedule, but you can recognize right away an optimistic schedule when, I shouldn't say, that's what I've done for a living for 40 years. So I can see if a schedule is overly optimistic and doesn't take into account not only aggressive in terms of tasks, but has left some tasks out, left some scope out. That tends to happen too. But so I get off on a tangent sometimes, Matthew. I don't know if I answered your question.
No, you did, and I agree with you. And the other thing we don't like over here is the new technologies being applied on our projects. You're sort of paying for them to go to school, as it were. It seems. So, would anyone else like to sort of comment on what are the most common mistakes?
Yeah, Matthew, I'd like to add to what Roy had said, and I think from personal experience, we were asked a few years ago to evaluate a potential project based on a feasibility study, and I've spent a lot of time working in Africa. And what Roy mentioned about people with experience in scheduling, in the scheduling, they had all of the mining equipment and processing equipment ferried into a landlocked country in Africa. It had to go through a second country from a port, and there were no viable roads. A lot of the roads were dirt roads, as they are in Africa. And they had all of this equipment moved in through one rainy season, and all had it done in 9 months. And anyone that's worked in Africa knows that kind of a schedule is absolutely ridiculous in those environments. And so that project would have been way, way, way over schedule, just from the point of view of moving equipment to site. So yes, experience and knowing your schedule is very important.
Yeah, we funded something similar, and most of our equipment didn't actually ever make it to site. It had been stripped out of parts. Lessons learned. Sorry, Chris. Talk to me about gold. You said some really interesting things in there, and it kind of points to the increasing value in terms of the scarcity of gold going forward. Do you think that there is a monetary role for gold in the future global economy?
Well, that's a really interesting question. There certainly has been in the past, as I mentioned, with the Bretton Woods Agreement and the fixing of the gold price back in the middle of the last century. Can that ever happen again? I think most people are worried that the global economy, and it has become a very global economy, is kind of hinges on what's happening in America and the US dollar. There's nothing tangible in that. And other countries of the world, particularly China, Japan, hold so much US debt or treasury bonds. I mean, if they were ever to do a so-called run on the bank, what the hell would happen to this global standard of ours? I think it's a very tenuous situation that we're in right now. And is there a role for gold in the future? I did a calculation. I did it a while ago, and then I did it again for sake of this talk today, dividing the global GDP. And you can Google that. The GDP of every country in the world comes to about $100 trillion. And if you were to divide that by the total amount, the total inventory of gold above ground, which I also Googled just 2 days ago from the World Gold Council, it's actually 244,000 tons of gold. It's not, I said 225, so it's gone up. But if you divide the global GDP by all of the ounces of gold that are above ground, it's dividing $100 trillion, $100 trillion by the actual amount of gold is 8 billion ounces. That's above ground inventory. Divide the one by the other. The price of gold that would need to sustain the global GDP is $12,000 an ounce. So it's not insane. Right now we're at $2,000 an ounce. So even if every country in the world had to have 1/6 of their GDP, or 1/6 of their reserves held by gold, if these G20 nations, whoever makes these decisions, could agree on that, you would once again have a tangible asset fixing the global economy and basically preventing the wanton printing of money, which is what's happened recently. So it's not inconceivable, Matthew. Interesting. I said I did this calculation a number of years ago, and back then the gold price needed to be $20,000 an ounce. So we're actually getting closer now, which means that gold production is increasing more rapidly than the global GDP.
Right. You made some gold balls very excited there. Joe, back to you. I'm toying with which question to ask you. I'm going to go with this one. What is actually meant by the catch-all phrase "grade is king"? You talked about low grade projects in there and high grade projects. What are the other factors that define the economic success of a project?
I think the main factor is, what is it going to cost you to get it out of the ground where it's located? And so all of the factors that come into play here is the size of the deposit, first of all. And secondly, is it a surface deposit? Is it an underground deposit? Certainly, as Roy stated earlier, that the higher the grade, the more likely you are to be able to cover over inefficiencies in an operation. It's not so much, I think, grade is the king, but I think the getting back to what Roy started with, it's the quality of the people. From an industry perspective, it's sort of understood that a poor low-grade deposit can be made workable with a very good experienced team. And a poorly experienced team can ruin even the best operation.
Okay, so grade helps, but it's not the only factor. It's the eternal debate. The eternal debate. Roy, just on you, so we're going to finish off with you, if I may. Over you're aiming for like one investment per year. Why only one?
It's actually a hobby. Put it that way. It's not to, when I said in my speech, I earned my money the old-fashioned way, building a contracting company and doing that work over the years. I'm obviously involved in the mining industry. I hadn't invested in it previously, and I thought, well, and I needed to get permission as well. And the easiest way to get permission was to take on one investment a year. And so we, as a family, my wife and I invest in one a year. Over the last few years, her faith in me has grown because of the successes. But yeah, it's more of a hobby, except for the last investment, which is public knowledge. I'm on the board of Torex. So when you join a board, in effect, you're investing in that company. So I have shares in Torex, and I joined the board for the reasons I stated, for the people, for the experience, and it's an exciting project they've got on the go to expand their mines. So.
Well, indeed, very, very, very good project. We've spoken to them, liked it a lot. I think that's very honest of you, Roy. Most of us are hobby investors, if we're honest. We have day jobs and we go to investing. And I wish people were as honest as you've been about it. And yeah, happy wife, happy life, right?
No, it's happy spouse, happy house now. You've got to be politically correct, Matthew. Come on, join the times, join the modern times.
I know, I'm so old school. I'm old school too. Gentlemen, thank you very much for your contributions today. So Joe Heinzer, WGM, Roy Slack at Cementation, and Chris Fleming, SGS. Brilliant content, very, very diversified. Hopefully people got a lot out of that. Thank you.
Matthew, one quick comment, Matthew Mayer. I just noticed there was a question there for me, how much gold is produced from base metal production these days?
Go for it.
I don't know the person, but I'll just answer. As far as I know, it's roughly 20%, 20 to 25% of that production I gave you comes from mostly copper production as a byproduct of copper production.
Thank you very much.
Thank you all. Great listening to you. Thank you, Matthew.
See you guys.
Thank you for having us.
Thank you. Yep.
Hi, I'm Peter Lynn from Eldorado Gold. Today I'm going to be talking about the primary processing of gold. Outline of the presentation, we're going to talk about comminution, gravity concentration, cyanidation of gold, as well as pressure oxidation of refractory sulfides. Comminution involves reducing the particle size of ore by crushing and grinding to liberate minerals of interest, in this case gold, from gangue. We use comminution circuits in gold processing that are similar to those used in other metals, the main consideration being the throughput capacity that's required for the process. So large tonnage operations, which are often tied to open pit mines, may use primary crushing, SAG mill, ball milling, or other combinations such as HPGR and ball mills. Smaller tonnage mines, often underground mines, can also use primary crusher, SAG mill, ball mill circuits, or three-stage crush followed by single-stage ball milling, and in some cases previously, rod mill, ball mill circuits were quite common. The circuit selection also depends on the downstream processing and particle size requirements, i.e. heap leach, tank leach, or flotation, which all have different requirements. Crushing is most often carried out on dry material, involving compressive forces to reduce the particle size of the rocks being fed to the crusher. Just laid out on the table here some of the typical crushers that we see in our flow sheets. Primary crushers, typically gyratory crushers or jaw crushers, are used in many circuits, with jaw crushers typically being used in smaller circuits with less than 1,000 tons per hour. Secondary and tertiary circuits are typically used with cone crushing. We have different close size settings to allow production of a different type of product that will be best suited for the downstream processing. The smaller crushers are typically smaller tonnage, and parallel circuits are required with multiple crushing lines. Relatively new technology such as the HPGR has replaced secondary tertiary crushing in a lot of applications, and these units have become significantly larger in recent years. There's an example here of high pressure grinding rolls, and this is an installation at our Kışladağ operation in Turkey, where we replaced several tertiary crushers with a single HPGR unit ahead of a heap leach. HPGRs use one fixed roll and one moving roll to crush material between the rolls. This allows for very significant throughput and high compressive strength and a small particle size in a single pass, or they can be operated in closed circuit with a recirculating load. Grinding is usually carried out as a wet process, and the size reduction of the particles is carried out by impact and abrasion. I've listed here some of the typical mills that we'll see in flow sheets, from very, very large SAG mills and AG mills, down to the ball mills and stirred mills that we see typically being used in secondary grinding or in regrind applications. One of the things that's been of note recently is these mills have gotten significantly larger, from the stirred mills to the SAG mills and ball mills, to allow for much larger throughputs with fewer parallel processing lines. Just a few examples from operations within El Dorado. We've got Kışladağ on the left side, as I mentioned previously, which is an open pit mine where we have a primary crush, secondary crush, HPGR, and we then recover gold from heap leaching. On the right side is our Skouries project, which is under construction in Greece, where we have a primary crusher followed by an SABC for SAG mill ball mill circuit. And this circuit produces a copper gold concentrate via flotation. Two examples of smaller tonnage operations where we have underground mines is Efemçukuru in Turkey, where we have an underground jaw crusher followed by a surface SABC circuit, as you can see on the left side, where we again produce a gold concentrate with flotation. On the right side, we have a typical underground mine at Lamaque in the Abitibi region of Quebec, where we have a crushing circuit followed by a rod mill and ball mill, which was very prevalent in mills built many years ago. These are much less common today, but quite a few of them are still in operation. Moving on to gravity concentration. Gravity concentration is carried out by taking advantage of the very high specific gravity of gold, with a density of 19.3. Historically, this was carried out with pans or jigs. However, centrifugal gravity concentrators are much more common today. Gold particles that are larger than 150 microns need to be removed so that there's enough time for them to be leached. As a conventional leach circuit, they would still pass through to the tailings without being leached. But gravity recoverable gold testing is carried out to see if gravity recoverable gold is present and whether it should be incorporated into the flow sheet. Following recovery of a gravity concentrate, they can typically be leached in intensive leaching. Two options are the Concept Acacia reactor or the Gecko ILR. These reactions are required to be carried out with chemical oxidants, either peroxide or oxygen, typically high cyanide strength, because of the very high concentrations of gold that are leached in these reactors. The concentrates from gravity can also be upgraded with shaking tables, and that high-grade concentrate can either be smelted on site, sold directly, or in some cases blended in with a base metal concentrate that's being produced by flotation. Moving on to cyanidation. So cyanidation has been the most common method for extracting gold for the last century. Previously, gravity recovery, amalgamation with mercury, and chlorination were very common, but these have mostly been replaced for the most part. While cyanide is highly toxic, it can be handled and used in a safe manner. Looking at the overall reaction for gold cyanidation, we require oxygen to be able to produce the gold cyanide complex, which is a very stable leaching product. It's also important that we carry out the leaching under alkaline conditions, as HCN can be formed below pHs of typically around 9.3. And HCN is a toxic gas, and it also does not leach gold. So the cyanide is not in a useful form if the pH is too low. We typically run at a high pH, and higher pHs can be beneficial if there's gold hosted in telluride minerals, and slightly lower pH if we're looking at minerals that contain arsenic or antimony. Oxygen is added as air or directly as oxygen. So 4 different methods are used for cyanidation, primarily agitated leaching or tank leaching, where we ground the slurry, and we typically leach it at a particle size where 80% passing is between 75 and 150 microns. If the material is amenable to coarser leaching, we can do either heap leaching or vat leaching, and this allows us to recover gold without expending all the costs and effort to bring the material down to 75 or 150 microns, as we saw in the tank leaching. However, it's important that the gold can actually respond to the process of leaching at a coarse size, and not all material does this. And intensive leaching, as we mentioned earlier, is typically used to leach gold from the gravity concentrates products. So moving on quickly to pressure oxidation of refractory sulfides. So some gold, as we heard earlier, is present within the crystal matrix of the pyrites or other sulfides that are contained in the ore. And this material cannot be liberated typically by fine or ultrafine grinding. So pressure oxidation is carried out in a pressure vessel. And we typically can run this on either whole ore or concentrate. And a lot of the refractory material needs to be destroyed completely in order to get successful leaching on the subsequent downstream processing. Autoclaves are very complicated circuits. They typically run between 200 and 230 degrees for gold circuits. They're refractory lined, and brick selection is important based on thermal and chemical stability. If the ores contain a lot of carbonate, we typically pre-acidulate to avoid high levels of CO2 in the pressure vessel. So in conclusion, primary processing of gold follows a lot of the advances to be made in other base metals projects over the last century. The largest single-line comminution circuits, whether they be SAG or HPGR based, have become much more common as equipment size has grown and made these feasible. Increasingly, stirred mills have grown in importance, both as regrind applications and more often as secondary mills in recent flow sheets. All these developments have been carried out to advance the production of gold from a wide variety of sources around the world. Thank you.
I am pleased to share with you today some thoughts on economic extraction and processing of polymetallic refractory sulfide ores, and in particular ones containing precious metals such as gold and silver, along with base metals such as copper and zinc. 4 points I would like to emphasize, which have been touched on by the previous speakers. That the readily accessible economic free milling ores are becoming harder to find. An increasing proportion of gold is expected to be from polymetallic refractory ores in the future. Therefore, there's an increasing need for pretreatment processes such as pressure oxidation, biological oxidation, or other forms of oxidation to treat these refractory ores. The pretreatment processes also leach base metals commonly present in the refractory gold deposits, such as copper, arsenic, lead, and zinc. As shown by Kessler and Wilkinson's survey of global hydrothermal gold resources, epithermal and copper porphyry sulfides currently represent about 48% of known resources. This exploration and discovery trend is expected to continue, with refractory ores representing a greater and greater share of global reserves. As touched on previously by Chris Fleming, there are two basic sulfidic refractory ore types: colloidal gold, which consists of a suspension of sub-micrometer particles within a host mineral, as shown in the first diagram, and solid solution, in which nanometer-sized gold particles are distributed within the ordered crystal structure of the host mineral, as shown in the second diagram. Polymetallic ores are ones which contain more than one recoverable metal, such as gold, copper, silver, and zinc. Carbonaceous ores are especially difficult to treat in that they contain carbon-based minerals that absorb dissolved gold during cyanide leaching. All of these require pretreatment to destroy or passivate the carbon and are sometimes referred to as double refractory. Solid solution gold is often associated with arsenic in sulfidic refractory ores, as shown in this graph of minerals analyzed and reported by metallurgists Chrysoulis and McMullen. The presence of the arsenic ion disturbs the crystal lattice, allows the gold atoms to occupy vacant spots within the crystalline structure. In the example shown, SEM investigation shows gold present in arsenopyrite near the grain boundary of an otherwise barren pyrite mineral. A little bit on the chemistry. The first two reactions shown are the principal reactions that create heat and generate sulfuric acid and arsenic acid from the oxidation of sulfide sulfur. The third reaction, which only occurs at temperatures greater than 150 Celsius, is the conversion of ferric sulfate and arsenic acid to scorodite, a stable form of arsenic. And I want to talk a little bit about this because it's important for what's to follow. The main reagent cost in the treatment of refractory sulfide ores is the oxygen gas needed to oxidize sulfide sulfur. Typical oxygen gas requirement for pressure oxidation is 2 tons of oxygen per ton of sulfide treated, just slightly above the stoichiometric value of 1.87. The heat release from the aqueous oxidation of 1 ton of pure pyrite is approximately 2,600 kilocalories per kilogram of sulfide. This is sufficient to heat 32 tons of water from 20 degrees Celsius to 100 degrees C, which is an important feature of achieving and maintaining autothermal operation. The acid produced by the oxidation of sulfide sulfur must be neutralized by the addition of lime and limestone, unless it can be consumed elsewhere, for example, in the leaching of copper-bearing minerals such as copper oxide, or in the leaching of zinc. Scorodite is a naturally occurring arsenate mineral with a very low solubility in a natural environment. Crystalline scorodite, which is produced at elevated temperatures, has been found to be more chemically stable than low-temperature products and has been proven to pass tailings leachate toxicity tests with less than 5 milligrams per liter of leachable arsenic. It is therefore the preferred form of arsenic in tailings residues produced by metallurgical extraction plants. To produce stable scorodite, the following process requirements must be met. A highly oxidizing environment is needed to combine aqueous arsenic in the 5+ oxidation state with iron in the 3+ oxidation state. Arsenic precipitates in the +3 state are less stable and more biohazardous. The ratio of iron 3 to arsenic 5 needs to be 3:1 as a minimum, and preferably 4:1 to ensure a stable mineral is formed. Elevated temperatures, for example greater than 200 Celsius, and pressure greater than 20 bar, produces a crystalline scorodite product which is more stable than low-temperature products. The presence of base metals such as copper, zinc, and lead extend the stability range of scorodite to higher pH range, to pH 10, which is desirable for maintaining stability during subsequent gold leaching processes. Pressure oxidation inherently stabilizes arsenic by providing all of the requirements for production of stable scorodite from processing of arsenical refractory gold ores. The release of arsenic from metallurgical operations is an increasing concern. Government regulations are reducing emission limits to minimize the health and environmental impact. More and more gold is expected to be sourced from refractory sulfide deposits, having a high association with arsenic, which poses additional processing challenges. Pressure oxidation inherently provides the conditions to produce an environmentally stable arsenic mineral suitable for metallurgical tailings storage. Moving into economic evaluation, just want to touch on sulfide sulfur oxidation capacities. This chart shows the sulfide sulfur oxidation capacity on the y-axis in tons per day of sulfide of various gold and copper projects as a function of plant throughput on the x-axis in tons per day of solid feed rate for 4 commonly used pretreatment technologies. Both axes in this chart are logarithmic. Copper smelters tend to be clustered around a solids feed rate of 3,200 to 3,300 tons per day and 845 to 937 tons per day of sulfide, likely due to the economies of scale. Roasters operate at higher solids feed rates of 3,800 to 10,800 tons per day, but much lower oxidation capacities of 38 to 200 tons per day of sulfide. Pressure oxidation tends to follow the same slope as biological oxidation, with both having a broad economic range of both oxidation capacity and ore throughput. Every refractory ore body has unique quantities of sulfide minerals relative to precious metal content. The higher the gold content per unit of sulfide sulfur oxidized, the greater the return for making the effort. Thus, the ratio of gold to sulfide sulfur, expressed as grams of gold per ton of ore to % weight sulfide, is a good indicator of the relative return or revenue per unit of sulfide sulfur oxidized, which is the operating cost, or which is proportional to operating cost. The recovery of other metals can also be expressed in gold equivalent terms by converting each metal grade into an equivalent grams per ton of gold using the market prices from any metals exchange. Using the gold to sulfur ratio as an indicator of the relative return on treatment of a refractory ore body, various resources and projects can be ranked in terms of their economic attractiveness to producers or investors. This chart shows the gold to sulfide sulfur ratio for 48 resources ranging from 15.4 to 0.12, with the most current deposits falling between a gold to sulfur ratio of 3 and 1. However, this metric alone is insufficient to make an early evaluation of any particular project. There's several other inputs, such as the costs of mining, energy and reagents, metal recovery, and metal price, that impact the economic value of a project. So a more sophisticated economic model that incorporates both the gold to sulfur ratio and these metrics is needed. In 2014, we developed a high-level economic model of a refractory gold project to enable screening of various technology applications and determine their economic potential based on the internal rate of return. The model includes major factors such as gold grade, gold to sulfide ratio, mining method, and other metal credits such as silver and copper, in addition to the input costs, metal recoveries, and metals prices. In the example that follows is for an open pit surface mine with a 2-to-1 strip ratio, 10-year life of mine in conventional wet tailings impoundment with pond. This table lists the inputs used in the model, including a range of gold, silver, and copper grades. For simplicity, all of the sulfide has been modeled as pyrite with no carbonates present. However, the model does have the ability to address other mineral types, including arsenopyrite, chalcopyrite, energite, and pyrrhotite, as well as carbonates. In this model, the silver is recovered through cyanide leaching, followed by carbon absorption, desorption using Zadra stripping, followed by electrowinning and retorting to produce a gold-silver doré. Where copper recovery is desirable, we perform a solid liquid separation after pretreatment, known as countercurrent decantation, send the copper-rich acidic solution to solvent extraction, followed by electrowinning, while the underflow solids containing the precious metals, gold and silver, are advanced to cyanidation, carbon absorption, desorption, and refining. This figure, for the base case, shows the internal rate of return on the y-axis as a function of weight percent sulfide sulfur grade on the x-axis for gold grade ranging from 5 to 11 grams per ton. Obviously, the IRR increases relatively proportionately with gold grade, but decreases with increasing sulfide content as the operating costs of treating sulfide increase. In this figure, we see the impact of adding silver at a grade of 50 grams per ton. The IRR decreases as the added silver increases the carbon loading and stripping reagents, but does not offer the same revenue as gold. A further increase in silver grade to 100 grams per ton results in an improvement in IRR across all gold grades, as the additional loading of the silver influences the size and cost of the refinery, but it continues to add revenue. Now we return to the base case for reference just to see the impact of copper recovery on the project economics. For copper at 0.5% by weight, the IRR decreases for all gold grades due to the additional capital cost of copper recovery using an SX-EW circuit. The model shows that at 0.5% weight copper, recovery of copper is not economically beneficial to the project, other than it reduces the consumption of limestone needed for solution neutralization. When copper grade increases to 1% by weight, it improves the IRR for the lower gold grades, but still has a negative impact on the IRR at the higher gold grades relative to the base case with no copper recovery. At a copper grade of 1.5% by weight, the recovery of copper now significantly improves. At a copper grade of 1.5% by weight, copper recovery and use of the gold to sulfur ratio is a useful indicator of economic potential. And we looked at an example of how the recovery of other metals such as silver and copper impact the economics of a gold project, and under what circumstances these might have either a positive or a negative influence on the project's internal rate of return. If you have any questions, I'll be happy to answer them at the end of this session. Thank you for joining us.
Hi, I'm Peter Lynn from Eldorado Gold. I'm going to be talking to you about precious metal recovery. It's just an outline of the presentation today. We're going to talk about recovery of gold from solution, looking at the adsorption on activated carbon, the processes of elution and regeneration, electrowinning, as well as the zinc precipitation and recovery by resin. So gold cyanide complexes that were leached from gold-bearing order and cyanidation have gold in relatively low concentrations. We need to be able to recover this from solution into a higher concentration to facilitate downstream gold production. The most prevalent way of doing so currently is using activated carbon. We typically produce activated carbon from coconut shells, and it consists of disordered graphitic carbon with a very high specific surface area. Three similar processes are commonly used in today's flow sheets. We have CIL, or carbon and leach, where we have separate cyanidation and carbon absorption circuits. CIP, or carbon and pulp, where the cyanidation and carbon absorption circuits are combined. And CIC, which is carbon in column, where we typically absorb gold from solution. And this is often used on heap leach operations as slurry is not involved. Looking at some of these different circuits, whether we use CIP or CIL, in some cases CIL can be beneficial if there's some preg-robbing behavior in the ore. So there's some natural carbonaceous material in the ore that competes for the gold that's being put into solution. And in the CIL, this is moved to the activated carbon more quickly, so that may be an advantage. However, they do have more carbon in inventory, and higher amounts of carbon is attrited. CIC circuits, like you see the photo here, incorporate upward solution flow through a series of cascading columns, and the solution actually fluidizes a bed of activated carbon for the recovery. We advance the carbon from one column to the next before it's removed from the circuit for elution and regeneration. So looking at elution, once the gold cyanide complex has been absorbed onto the activated carbon, we have to elute or strip it for downstream recovery. Elution typically requires high temperatures and high concentrations of cyanide, pH, and pressure. So the two main technologies that are used for elution are the Zadra process, which is the older process, somewhat lower cost, and typically favored in North America. The eluent is typically 1% cyanide, sodium cyanide, and sodium hydroxide is used as well. Temperature in the range of 130 to 140 degrees, high pressure, and a cycle time typically of 8 to 12 hours. The main competing process is the AARL, or Anglo-American Research Laboratory process. Developed more recently than the Zadra process, but it has been around for quite a long time as well. The carbon is pre-treated in a solution of sodium cyanide and sodium hydroxide, and then hot deionized water is used in the elution stage. Somewhat lower temperatures and lower pressures than the Zadra process, but higher requirements for that deionized water in terms of its purity. Once the carbon has been eluted, it can be regenerated, and this is done typically using a reactivation kiln, where the material is heated up to temperatures of 700 degrees Celsius, and in some cases steam is also added to aid in the regeneration process. Acid washing, either using nitric acid or hydrochloric acid, is used to remove inorganic foulants from the surface of the carbon. The actual sequence for elution, acid washing, and regeneration is not the same. It can be carried out in different orders, but usually regeneration is the last stage, and the carbon is activated before being returned to the circuit for leaching. Electrowinning is used to plate gold from the high gold-bearing eluates onto cathodes. And for Zadra circuits, it's done in series, with the elution column and eluate recirculated to the elution column during the process. And for the AARL circuits, it's typically more handled as a batch, as it's independent of the elution process. While most gold is recovered to activated carbon, some gold is actually recovered in solution by the Merrill-Crowe precipitation. This process is older and typically less advantageous unless you have a high silver content in your deposit, and that would require significant costs to be operated as a CIP or CIL circuit. It requires clarification of the solution as well as deaeration. After the solution has been clarified and deaerated, zinc dust is added, and the resulting zinc dust, which is now formed with gold, is precipitated and filtered, and then smelted to produce doré. Resins have become a lot more popular in recent years, but they're still used relatively sparingly in cyanidation. Predominantly have been used in Russia and former countries like Uzbekistan and from the USSR, and they're much more prevalent of use in other leaching systems, such as we see in thiosulfate leaching. The other advantage is that they aren't necessarily the same type of material as we have carbonaceous material in preg-robbing ores. So a resin that can be used to leach in a leaching system that doesn't have a competing sort of interest for the gold with preg-robbing is often an advantage. So in conclusion, activated carbon technologies have advanced significantly and for the most part have displaced other methods of recovering gold from solution. While mature, there's modifications and alterations to these unit operations, and they continue to be made. As I mentioned previously, zinc precipitation is still used in specific applications, primarily if there's high silver content in the ore. Resin technologies continue to be developed, in particular when considering alternate lixiviants and other reasons where resin might be favored over activated carbon. Thank you.
Hello, everybody. This is Raf Davila. I sit in Toronto. I head the mine waste and mine closure practice at Hatch globally. We actually work out from different places around the world, from Australia to Europe. And today I've been asked to discuss what, in my perception, is a need of the industry regarding tailings management. And what I felt compelled to discuss here was the advanced tailings integrated management system as an approach for a circular economy. And I'm saying this because tailings is often perceived as a problem, and at Hatch we believe that it could be also an opportunity, a possibility for the industry in making sure that we are also into circular economy, not just about getting more out of a material from the metals perspective, but in the big picture, what can be done and has been done in the industry to accommodate products for our countries, our societies. And really that's where I'm coming from. A bit of what needs to be understood, and this was after the Brumadinho failure in Brazil. It was produced by Visual Capitalist to graphic what is the problem, let's call it, what the scale of it. And you have to see the size of Manhattan, the island of Manhattan, and what means to have a situation of the production of tailings. It has been said that the production of tailings in the Western world alone would amount to 217 cubic kilometers, and that means a cube of about 6 kilometers base by 6 kilometers high. It is about, say, covering the entire UK of 3 centimeters of tailings every year. And what we know that happens today in the mining industry is that there is a general trend of the ore grade, and of course, miners have found out that you have to produce more. It's almost a given that you have to produce more to come up with the same amount of materials and metals in the industry. So invariably, you ended up with a larger problem with tailings produced with lower grades. Okay, so, but if we see this and we take a subset of metals and in the industry, going from alumina, nickel, iron ore, coal, gold, and copper, the issue of a generation of tailings is mostly driven by copper, gold, and coal, if you will, in terms of scale, but also in terms of the complexity of containment. You might find that residues and other tailings can actually be detrimental to the environment as well, if not properly contained. So having said that, we ended up with a situation that could continue to be generated, and the were generated in the period, for example, of 2018 to 2022, and then have an annual generation that we talked about. We have to focus on those things in terms of scale, but also in terms of a potential higher impact to environments. So we ended up thinking that yes, we have a problem. There is an issue with respect to this larger production of copper, iron ore, and coal. But the key thing here is that we should understand the facts as well. And we picked up 2 examples. One with iron ore mined out from the period as well, from 2010 to 2022, and also alumina produced in the same period of time. In red is actually the metal produced in the industry, and in gray is what we computed to be the same amount of metal but going into tailings. In fact, the story goes that in alumina, you probably put more into tailings than actually the industry needs to put into the market. That creates a potential opportunity, as I've said, into this, what I want to make the point, into the aspect of circular economy. All right, so that's on one side, but on the other side, we have the same business as usual. The mining industry has to make sure that containment is taken care of when we operate safely these facilities. And more often than not, all these aspects of mistakes and even large failures have happened because of human error, misinterpreted data, and poor planning. And here's the key thing. If we want to see this as an opportunity, then we must plan ahead, because what comes at the end is really what dominates. And very seldom you normally design for what it is at the bottom of your bodies, not at the top of your bodies. However, the data that we normally have for designs and planning is at the top of your bodies, because that's the first material to be processed. And hence the issues of mine closure and mine planning becoming a problem at the end of the day, not at the beginning. Although we do a lot in terms of designing when it comes to greenfields. So we have to provide not just timely metrics, but ensuring that everything runs according to plan to be able to close dams, and in the meantime serve the aspects of keeping up with the standards and protocols during the production of the tailings throughout the life of the mine. Anyhow, the key issue here about tailings failures and what has to be controlled through the life of the mine can run from slope stability, structural stability, overtopping, and also due to environmental hazards like earthquakes and floods, and all the aspects with the design itself, like internal erosion. All of these aspects have to be taken care of throughout all the phases of the design, into ramp up, into production, and into closure and post-closure. So what can we do to that? I do believe, and at Hatch, we believe that it is a control of the information, and to control the information, you have to control the data in a centralized format, so that we feel that we can plan ahead in case, say, the industry doesn't require some kind of element going into tailings. We've talked about alumina, we've talked about iron ore, but even in copper, we can find that sometimes there is an element that might not be good for the industry or for the market in certain period of time, but then it becomes something that could be used later in the future. In, say, copper, you can have a manganese that still leaves some tailings, but in some instances, you might have the opportunity to produce something for the civil construction industry, like cement, or you can convert your tailings into fertilizers, or you can convert into any other type of active element for the agribusiness. That having said, you might end up knowing that you have to plan and displace your tailings into some place where you can recover it, and you have to monitor it. So at the same time, you have the increase of the safety and reliability of the tailings facilities. You have to improve the operational effectiveness and the efficiency of your teams working there. And you have to make sure that it has the speed of and integrity of the governance and compliance, of course, all together with social license. But also you have to create or leave the opportunity to have the possibility of a business case in the future. That is what we believe. It's an integrated management, and you can only do that, as I said, if you centralize the information and provide a solution in that respect. That's why we believe in a holistic approach. We do believe that the core of it is water management, and we think that in all the process from milling, from the dewatering of the tailings and potentially other mine wastes, and to the transport, the storage, and certainly the final release into the environment of the effluents, is where everything relies, and it all is about the management today of data. So we're trying to make sure that if we see these as a possibility, we not only take care of the geotechnical control, the hydrotechnical control, to make sure that we accompany the operational management, the anomalies, and the change management through the life of the site, and make sure that all the position is where it has to go. But at the top of it, from the operational perspective, a digital tool is needed in the industry, and that's how we are coming up with this idea of having not an operational water management, because tailings management is about water management. And if we manage the water, we will be accomplishing all those objectives for control, both hydrotechnical and geotechnical, but at the end of it, also in being able to recover water. Sometimes it's a deficit, and more so in those instances. So you can end up with a situation where you can have a system where governance standards are accomplished and that can be audited in any given time. That in itself would be a digital platform that we perceive, in which we will have a site setup where all the data can come in. It has to have, obviously, the geotechnical control through monitoring all the metrics. We have to have the tracking of the deposition of your tailings specifically, but this can be also taken into hard waste rock or any other type of saprolitic waste rock for that matter, because these are also mine waste facilities that can be put together adjacent to each other in a co-disposal arrangement, or even you can work with multiple materials to make sure that you commingle them into a single facility. Either way, everything, all the materials, the mass has to be tracked all the way down from the generation of them up to the deposition. As I said before, we should be able to manage from the operator's side the water balance. This is not the designer typical water balance that could be from the probabilistic perspective, but deterministic in essence, and make sure that this happens all around the year in any given day, without the operator having to run and to also or see thresholds with respect to natural hazards, for example, and do it in a probabilistic manner, which sometimes could come late in the responses. We need to be audited, and this we've made use of the GISTM framework to do that, so that any digital platform has to comply with auditing from the 7 pillars of the GISTM standard. We have to accompany any type of management, because if we have changes, these have to be recorded, and if they are not recorded, very little can be done in the future about knowing if there was any fault at any given time. Dashboards, of course, have to be customized for every need on a daily basis. We need to make sure that through artificial intelligence, we can get into the instrumentation, and all that data can be managed within a single engine. We can create models with that data dependent, and it goes from the physical stability to the geochemical stability to the planning for the business case in a circular economy. We have to plan for all management of each work item, because we work in teams, and this cannot be left out to someone else to deal with. We can plan it both with the designers, engineer of record, the independent technical review board, all these aspects on a day-to-day basis, and the long-term planning as well. We have to make sure that it's easy for our technical people to go into the field and inspect and provide all these tasks through pre-configured assessments. And all in all, that comes back to the circular economy. We can create business cases with a tailings mass or a mine waste mass if we see it in a different form. So we have to reimagine the whole situation as we normally discuss in the ICMM, to make sure that we could not just reduce on one side, but especially reuse. Reuse being used in this term as something that already exists and can be given a different purpose, or repurpose the mine waste specifically for tailings by eliminating even the mass of tailings that could become a liability, and see a different way of looking at this kind of problems as possibilities, as I said before. There has been some work that we've carried out in Hatch before about the reuse and the tailings valorization. We came to the conclusion actually that we could come up with innovative ways of using tailings for building, construction material, agricultural uses. The resource, of course, that's the most typical aspect in any given tailings facility. We could come up with the possibility of neutralizing even other types of mine waste and use them as generation of energy. However, we cannot do that if we do not look backwards. Most of these solutions can be implemented, but not when you generate tailings. The work of actually making sure that we close these gaps is going backwards and seeing if we can accomplish that more from the generation and the processing perspective for all types of metals, going from bulks to base to platinum group bases and minerals. We can have obviously some kind of innovation when it's already a legacy site from the tailings management perspective, but all in all, they have to work together. And finally, when it comes to tailings reduction, that becomes even more important because the technologies can only work if we look backwards, starting at even the geological definition. We can do some through the mining process, the material handlings and the concentration and refining. However, if the problem is seen as a possibility again, it has to be looked from day one into what we feel is the key point of our task of reusing and reducing tailings and mine waste in general. So that in all is really what we wanted to discuss here, and the possibility of making sure that we see tailings and even the water, the processed water, and the reduction of processed water. We have instances in the mine industry in which we have deficits in the sites that we work from, and we have to import water, for example, from the ocean, desalinate it, and take it and pump it at a very high cost to high elevations. We have then to make sure that of all that water that is used in the process, you can recover right from the beginning, from the tailings integrated basis at the end of the plant, or we can recover it through managing the supernatant in the tailings facility itself. So those are dramatic instances in which large volumes, especially the copper, it come into my mind, the copper sites in Western South America, in which this kind of thing happen, and a lot of that water is locked in the tailings. Managing that data and being able to follow some innovative aspects of recovering water also for them in the tailings is a way of coming up with good ways of reducing also the tailings, because if we can compact the tailings to make them drier, and instead of being a slurry deposited as a stack, you can make it more, you can reduce the size of the problem at the site, and then also the potential reuse and re-excavation of those tailings if needed in the future. Anyway, so that's really where we believe it's going to be sitting today with respect to this aspect of coming up with reusing and reusing tailings and mine waste generally speaking. Thank you very much.
Hello, my name is Nolina Hearn and I work with SGS Natural Resources in Vancouver, Canada. Today I'm going to talk to you about effluent treatment in the gold mining industry. We all know that extraction of gold creates liquid effluents, and these can contain many contaminants. This water needs to be effectively treated before releasing to the environment to protect surrounding ecosystems, communities, or before we recycle it into the extraction process to avoid any negative impacts. Traditionally, gold mining operations have employed techniques like settling ponds or tailing dams to manage their liquid effluents, but while some of these have been effective, they're not without drawbacks. So the potential for failures and issues highlights the need for more sustainable and resilient approaches. So today, I'm going to focus on some of the common liquid effluent types in gold mining and give an overview of some common treatment options for these. We're going to take a look at cyanide effluents and those containing metals that need removal, pH adjustment, and also consider the case for zero effluent discharge. So cyanide remains one of the most commonly used lixiviants for gold leaching. After liberation of the gold, cyanide is used to solubilize the gold. Gold is recovered, and you get left with a cyanide-containing effluent. Of course, cyanide is extremely toxic, so we need to make sure that the cyanide is either detoxified or removed before the effluent is released into the environment. We can also recover the cyanide for reuse. When we look at cyanide destruction, there are three common methods that are used in gold mining. The SO2 air method is used mainly for slurries, and it is based on a sulfite reaction. Hydrogen peroxide is used for solutions, and Carrez acid, which is the common name for peroxy monosulfuric acid, is also used for slurries. Looking at the SO2 air process, what we're really working with here is the sulfite reagent. SO2 can be dissolved to form sulfite, and you can also use sodium sulfite or sodium metabisulfite. I apologize. The reaction is catalyzed by soluble copper at a pH of 8 to 9, and it focuses on a conversion of weak acid dissociable cyanides to cyanate, as you can see in the equation, if you're so inclined. Iron complex cyanides are reduced to the ferrous form and precipitated during this process, and any residual metals that are liberated from these wad cyanide complexes are precipitated as hydroxides. Moving on to peroxide, this is used more for solutions containing cyanide because there's really high reagent consumption in the presence of slurries. The peroxide also reacts with the weak acid dissociable cyanides to produce cyanate. Again, this is catalyzed by soluble copper. It lacks a pH of around 11. Metals can be removed by precipitation, and any excess peroxide decomposes to yield oxygen and water. Carrez acid, the peroxy monosulfuric acid reagent, is a very strong oxidizing agent. It is produced from hydrogen peroxide and concentrated sulfuric acid, and is not a stable acid, so it needs to be produced on site and used right away. Cyanide destruction using this reagent is really fast and doesn't require any catalyst. Of course, we can also try to recover the cyanide. This has both environmental and economic benefits. Recycled cyanide can be 2 or 3 times cheaper than new cyanide. It also allows the detoxification costs to be reduced. With less new cyanide needed, there's less transported, there's less stored and handled, and that reduces the risk of spillage. And we also have potentially reducing harmful salts in tailings and recycled water. I just have a list here of some of the common methods of cyanide recovery. The first, acidify, volatilize, and reneutralize to recycle. There's the SART process, which using a sulfidization step, and again, recycling. HANA is a strong-base resin exchange process, and Augment is another strong-base resin exchange process to extract copper as well as cyanide. So another significant source of water contamination in gold mining is the potential for acid rock drainage formation. Gold is associated quite often with sulfide minerals like pyrite and arsenopyrite, and when these sulfides are exposed to the environment, to oxygen and water, during mining, during excavation, they can oxidize to produce acid rock drainage and at the same time release metals. This is a really common issue in waste rock dumps and runoff water from site, and can also be a significant problem at closed or abandoned mine sites, leading to contamination of groundwater and surface water bodies. Because acid rock drainage can be so devastating to the environment, it's really important that we characterize that to predict whether this is likely to happen with time. We need to know what is the potential for acid formation, what metal release may be associated with this acid formation, and is there any available neutralizing potential in the material to counteract any acid production. Acid rock drainage is characterized by low pH, high salinity levels, and elevated levels of sulfate, iron, and other metals. There are a number of predictive tests used to assess the likelihood of acid formation and metal leaching, and we need to thoroughly characterize to try to mitigate the formation of acid rock drainage. Static testing is usually the place to start for acid prediction. We use methods of acid-base accounting, looking at the maximum acid generation potential based on the sulfur speciation, the neutralization potential based on the total inorganic carbon and measured bulk neutralization potential, and we look at the net acid generating potential and look at the ratio of those things to see if we're likely to have acid production issues. The potential for metals in water runoff is assessed by a number of leaching tests under different conditions. Common tests include the shake flask extraction, which uses deionized water. There also is the synthetic precipitation leach procedure, which simulates acid rain, and there's a host of other short-term leaching procedures to give that first assessment of metal leachability. Kinetic testing is a longer-term testing, which gives an indication of sulfide oxidation and acid neutralization with time. Humidity cells are commonly used where waste rock or tailings are subjected to cycles of water addition, dry air, and humid air. And we also can have a range of column leach testing, which can simulate all sorts of conditions like subaqueous disposal, cemented paste tailings, and various other conditions. Process effluent, as well as things like acid rock drainage, will often need neutralization to adjust pH and to remove contaminants by precipitation. Raising the pH will deal with pH issues as well as precipitate metals. Lime and limestone are commonly used, but the sludge produced is quite low density, only 2 to 5% typically, and difficult to thicken or filter. So we moved to a high density sludge process to reduce the sludge volume by increasing its density. So this process has been used in mining since the 1980s. The incoming effluent is mixed with a neutralizing agent as well as recycled sludge. After the neutralization, it's fed to a main lime reactor with aggressive aeration and agitation. The discharge gets treated with flocculant and sent to a thickener or a clarifier, and then a portion of that sludge is recycled to a holding pond before release. The sludge volume is significantly higher density than traditional lime neutralization processes, and this decreases the disposal costs. It also helps to improve chemical and physical stability. It's been proven long-term to be effective to avoid water contamination by providing a high-quality effluent. And equipment is pretty standard and can be easily automated. I'd like to introduce the concept of zero effluent discharge, which is an engineering approach where all water is recovered and the contaminants are reduced to solid waste. This is achieved by recycling and recovering water and contaminants as a solid form. The capital expenditure and running costs are pretty high, as well as energy consumption is pretty high. And the solid waste that is produced can have high levels of hazardous chemicals or heavy metals. However, when water is really scarce or environmental regulations are stringent, this can be a very beneficial approach to dealing with wastewater effluent. There are just a couple of pictures here of some saltworks setups for dealing with zero liquid discharge, and some listed processes that can be used that you can refer to. So that was a super quick overview of wastewater treatment in the gold mining industry. We know we have to treat our wastes before release to the environment. Recovery of reagents and water are becoming increasingly important, and it's important to consider effluent treatment as intrinsic to the process design and evaluation, rather than something that comes later. Thank you for your interest.
Hello, my name is Viken Abrahamian. I'm a senior process metallurgist at the Royal Canadian Mint in Ottawa, Canada. And the topic I'll be presenting today is the refining and recycling of gold. So I'll jump right into it. So I'll touch on sources of impure gold for refining, why we refine to obtain high purity, an overview of refinery operations, a word on ESG in refining, and some concluding remarks. So on sources of impure gold, and I'll read the first line on the slide. Doré bar is a semi-pure alloy of gold and silver, and it is created at the site of a mine. So essentially, Wikipedia got it right, but gold and silver often comes with the presence of some other metals, mostly copper, but there are other metals, lesser known metals like minor elements, some zinc, elements, but there are other metals, lesser known metals like minor elements, some zinc, nickel. Essentially, the alloy is rather impure and needs further refining. Up to 25% or up to sometimes 30% of gold comes from recycled scrap. This comes mostly from the jewelry industry, but you also have electronics, old bars, and coinage. I've added a line on this slide mentioning base metal circuits, and I'm referring to copper electrorefinery circuits where gold is recovered. And often at these sites, the gold is not only recovered, but it is purified all the way to a high purity and cast into a bar, which is sellable. In the case of a mine of gold or scrap jewelry, that is not the case. Very often, and most of the time, impure gold from those sites, from the mine and from the scrap dealers, has to be expedited to a toll refinery, where the secondary refining can occur to further purify the material and make it tradable. So why do we refine? Again, this is the big question. Well, first and foremost, to remove the impurities, add value to the material, market worth, achieve a minimum of 99%, and most of the time all the way up to a 4.9 purity, making this bar, the material, tradable. There are regulating institutions for refiners. So toll refiners before refining, some of the activities that take place, they have to make sure that the gold has been responsibly sourced, that there is sound ESG practice from the source, and then upon refining, the material has achieved purity and it is cast into a shape. And there are strict tolerances, very, very stringent. Up to 16 elements are analyzed by spectrometry in the case of 4.9s. Some refiners even add security features on bars. There in the right-hand photo, you can see some of the bars refined produced at the Royal Canadian Mint in Canada, with the big 400-ounce or 12-kilogram bar on the left-hand side. So again, where do toll refineries or refineries that refine the gold position themselves? And it's essentially between the bullion exchange, the traders, the vaults, and the mine or the scrap dealers that require that refining. So the refiner is a kind of a pinch point. It's regulated very, very strictly, and I refer to the London Bullion Metal Association, which oversees the regulation and the strict membership. Essentially, the refiner is maintaining supply chain integrity, and making sure that all the rules are followed, including it includes storage and everything that goes around the shipping of the pure material. So I'm going to move on to unit operations in a toll refinery, which receives bars from various customers. The very first step is to evaluate the material that comes through the door. The standard procedure is what is called a pre-melt. So each bar is taken and is melted in an induction furnace. So as the gold melts, it's homogenized, and it allows the taking of a sample. And the sample is usually drawn out using vacuum pin tubes, the vacuum pin tube technique. There are 3 that are taken, so in triplicate, 1 for the refiner, and then there are 2 additional ones, 1 for customer and arbitration in case of a dispute. The sample is then sent to a laboratory, and the fire assay technique is used to evaluate the precious metal content. The molten metal is cast after melt weight is taken, and then there's settlement with the customer before moving on to the refining stages. In refining, speed is of the essence. At the toll refinery, you don't want to hang on to too much precious metal. You want customer material to go through the system rather quickly. So very strong reagents are used to process chlorine gas, hydrochloric acid, nitric acid, oxidizing systems in general. The separations between precious metal, base metal, and minor elements happen quickly, and then there's a final step in purification to obtain the gold, but also silver and the platinum group metals. So this is a representation, a skeletal flow sheet showing a classical refining system that's used by reputable refiners. Some of the, most of the larger refiners still use this technique. So it's a 2-step refining of the gold doré, which is first melted in a furnace, and chlorine is introduced to separate away everything from the gold. And this is the Miller chlorination process. So it allows recovery of copper and silver in a salt slag, whereas every other metal is mostly volatile and is drawn away into the exhaust. So this leaves behind molten metal after this first stage, which may have a purity of up to 99.5%. It is cast into anodes, and then it goes to a final stage of purification, which is gold electrorefining and the recovery of 4-9 cathode sponge. Platinum palladium build up in the electrolyte system of electrorefining over time. So the solution is purified to recover these metals. So Miller chlorination, this is a process that is over 150 years old, invented by Francis B. Miller in the 1860s. And again, you see the induction furnace system with a chlorine lance introduced. This all happens at high temperature. I'm mentioning 1100 Celsius, but it is an exothermic reaction and needs to be controlled. Again, the volatile metal chlorides fume off, and a non-volatile slag rich in silver is recovered and skimmed away for processing. And the lower picture shows the cast anodes, which are basically 99.5% in general, but they can be slightly impure, anywhere between 95 and 99.5. And the final stage of refining is, again, a very mature process invented in the 1870s in Germany. And here it's essentially placing the anodes in an electrolyte, gold chloride electrolyte, passing a current and plating out the impure gold into a purified form on titanium starter sheets. This is sort of all done obviously in a hydrochloric acid system at 60 Celsius. Gold refining and ESG. So at the Toll refinery, it's always very important that the incoming bars, there's a limit imposed on the amount of deleterious elements or minor elements, so to speak. Refiners want to have their workers work in a safe environment and not be exposed. All the impurities that are separated away, they're recovered in byproducts. They are all sent off-site for refining, and often they're very rich in copper, so they go off to a copper smelter. There's a definite trend to move away from the use of chlorine gas, as there are, the regulations are becoming a lot stricter, not only around the use but around the transportation of chlorine. Smaller refiners have already moved away from the use of chlorine. So what they do is that they granulate the material into water. The bars are melted and granulated, and then the grains are contacted with a mixture of acids. And I'm referring to aqua regia, which is the standard process. So it has its associated problems, and a lot of acid is used in that process. There are other oxidizing chemistries used mostly around electronic scrap or powdery solids, often slimes from electrorefining circuits. Overall, there's a trend towards greener processing. And I've put a little picture at the bottom there. Yeah, metal distillation is the latest and probably the most novel of these units that are being adopted at refineries. So it allows the separation of volatile metals and even silver from the gold, but it is a crude separation. In conclusion, so the necessity of refining to high purity, achieve a standard. This allows the trading of the gold. The responsible sourcing and ESG practice is very important, especially with the accredited refiner, which I spoke about supply chain integrity. Toll refineries provide the service to the mine and the scrap industry. Right now, mature technologies are still being used for the refining, and they do rely on vigorous chemicals. So again, the mention about moving away from chlorine use and adopting slightly greener technologies. Again, this remains a challenge for the future, but it's definitely where it's going. So at this point, this is the end of my presentation. I'd like to thank everyone for their attention, and also thanking MetSoc and Boyd for inviting me. So I look forward to any questions.
Right, well, there we go. That's quite a long session, that one. So just to remind you, we had primary processing of gold and precious metal recovery with Peter Lind. We had recovery and removal of copper and gold from polymetallic materials with Murray Pearson of Hatch. Raf Davia at Hatch as well, so joined us for tailings residue management. Nolene Hearn was talking about effluent treatment. I don't think she's going to be able to join us today, so Raf, you might have to pick up on some of that commentary from her. And then finally we had Vikan Abrahamian of Canadian Mint talking about refining and recycling of gold. Gentlemen, welcome. I think It might just be us. It might just be us. Okay, so I think it was that's fascinating. Thank you very much for sharing your knowledge and experience. And I want to sort of come at this Q&A session. Lots of questions sent in, but I think the overarching sort of theme seems to be we're at the sort of pointy end of the stick. You guys help with the economics of the projects. You make the money in the way, but you also drive that kind of perception out there. And I'm talking about how people outside of mining view the sector. So with your answers, if you don't mind sort of giving us that kind of balanced view about what things are like today, and maybe where these future technologies, new technologies are in terms of holding mining accountable and being better, not just economically, but also in terms of that kind of ESG, social responsibility component. Peter, and I'm rushing because there's so many questions. Peter, welcome. Can you just talk about the areas that you deal with? So they're obviously newer deposits. Are they coming with impurities that are difficult to handle, or is it just going to be they're all known entities and it's more of the same? Is Peter there? Oh, he's on silent. We're missing Peter. Okay, I'm going to jump into Murray until we work out how to get a hold of Peter. Murray, refractory. That is a word which usually scares off a lot of investors, but you talked about it quite calmly and casually. We feel you feel that the refractory gold is nothing to be frightened of.
Well, it's definitely challenging. I've spent, let's say, about 25 of my 27 years at Hatch working with refractory gold, and it's not to say that it's easy, but the technology that was developed, in the early 80s has matured dramatically to the point now where most of the technology and materials of construction we're employing are quite proven, I would say. There's still challenges metallurgically because every ore body is unique, but certainly, and I'm speaking of, from a perspective of a mechanical engineer, I think we've nailed a lot of the material problems and equipment, design problems that were challenges, let's say 15, 20 years ago. So in that way, we're much more comfortable now using, for example, pressure oxidation in the treatment of refractory ores, and now even more recently these double refractory ores where you've got both sulfide and encapsulation and carbonate and elemental carbon in the ores.
Right, and are recovery rates getting better with refractory? Is it a case of refining existing technologies, or is it new technologies coming through that may unlock the potential?
So in terms of oxidation of sulfide, those are very high, generally in the high 90s. In a lot of the projects I've worked on, we target 96, 97% oxidation. And usually then along with that, you get high gold recovery also in the 90s, and then silver appreciably lower, generally still in the 80s. But that's because of other things that lock up silver. So yeah, we are seeing better recoveries. Better control over pressure oxidation and biological oxidation, which then leads to more stable operation, more consistent recoveries, I think, and that's been a big improvement from the operations side over the past 20 years as well.
Okay, and Raf, I'm going to jump to you because I think this might be a question which both yourself and Peter could tackle, which is around this kind of movement towards sort of dewatering and dry stacking of tailings versus wet tailings. Which again, it's had some bad PR in the past with the Vale incident, etc. What is the momentum?
Okay, around the industry, I would say that you have different pockets. And then you have around, it's not geographic only, but around the minerals, and depends where you are in the base metals as well, precious metals here. It's what brings us to the table today. So generally speaking, I think it is in the copper subsector, for example, is about scale.
how to dewater quicker and more efficiently with aggressive pressure filtration. And today there is, for example, some pieces of equipment that are being piloted with plates of about 5 meters by 5 meters. Remember that half of the resources in the world are in desertic areas in Western South America. And that's where the mining production really is and where it's economic to a certain degree in the industry. So dewatering fast means that kind of scale. Elsewhere, I would say that their lithium and gold, for that matter, they're trying to do that, not necessarily through pressure filtration. Vacuum filtration is going, and certainly underground, there has been a lot of development with disc filters in the underground, both in altitude as well. So I think that yes, the trend is going there. Everybody wants to have a more compact area on surface. Underground is not that much, and tailings have been traditionally been used for backfill as well for underground. So it's almost a given that you want to use your tailings as a structural material as well. I think that there's no way back. Right? I think that if mining has to show that it's using resources, and by that I mean real estate, in a more efficient way, we have to go compact. That means in terms of mine waste, both for tailings and waste rock, to have facilities that put more in less space. That's how it goes. Together with water management, because as it was told also in the presentation by SGS, society is looking about not just surface water effluents, but groundwater plumes being formed underneath the tailings facilities.
Okay, and Peter, can you add to that?
Yeah, I guess one of the things that I just want to pick up on there is the sort of the economy of scale when you start looking at the pressure filtration. So two of our existing operations, we do dry stack tails, but they're fairly low tonnage operations. So we've been doing that technology for a number of years. But with our project that's under construction, it's more of a larger tonnage, at least a medium tonnage operation. So we have these larger pressure filters going in. So I think that's the direction that we're seeing. A lot of advances being made in terms of the size of the filters, the size of the plates, and really being able to even think about doing dry stack for large tonnage operations is something that's happening a lot more currently.
Right. Okay. Interesting. Like I say, we're missing Nolene here, so there's some questions for her. If any of you can pick up on it, do. If not, we'll move on quickly. But Peter, back to the original question, which was with regards to these newer deposits that people are finding. Are they coming with impurities that we're not yet equipped to handle, or are they known entities and they just handled by traditional means?
Yeah, I think in a lot of ways we know most of the impurities that are typically coming with gold deposits, either if they're gold alone or gold with base metals.
What are the major ones that they need to be worried about?
So yeah, arsenic is a pretty significant one. Copper can be a benefit or a hindrance depending on how much concentration's there. It can be challenging. Those are some main ones. Antimony can be a difficult one. Mercury is one that's often with gold. One of the things we find though is it's often the economics that allow you to actually produce something of value from those complex deposits, and there's a number of factors that drive that. Whether it's just the capital cost, operating costs, the production of wastes from some of the processes are quite high. So there's a lot of things to look at with these deposits.
Right, and so for you, what do you think the worst ones are? You obviously mentioned mercury in there. I've seen projects that have been affected by that mined around it. So how do you deal with it?
Well, I think mercury is a fairly known quantity. How we deal with it, we just have to make sure that our processes capture, and then we actually do stabilize it and deal with it in an appropriate manner. Similar with arsenic, we've got lots of gold processes that do have to remove arsenic to be able to recover the gold. And there's different methods and technologies that can be used to stabilize that, as Murray talked about some of them in his talk. So those are the types of things that we know that we have to do to be responsible producers and still have a profitable operation.
And Murray, that was a good point. Actually, you talked about it with regards to what Peter just said. You know, copper can be a good thing or a bad thing. I mean, how do you view it? Oh, we're missing Murray.
Oh, sorry. Yeah. So where it is in, let's say, large enough amounts that you need to, because it consumes cyanide as well, and so if you don't remove it, it can be very detrimental to your operating costs, and of course the value per gram, of copper absorbed by cyanide is not as valuable as gold, so you're not getting the corresponding revenue. So the tricky bit is, and as I mentioned in the outline, copper removal is a necessary evil. You have to get it out just to control your operating costs and your cyanide consumption. Then the question is, well, how do you do that? And if you're not recovering it, how do you do that economically? And if the grade is high enough that you can recover it and sell it as a saleable product, either as I mentioned in my example, as a metal through SX-EW process, or even as an intermediate product such as copper sulfide, well, then you have a solution and a viable solution, and it can add to, as you saw in the charts, it can add to the economics of lower grade deposits. It can still, even at high grades, inhibit the economics of higher gold grade deposits. But most deposits are sort of falling somewhere in between that 5 to 10 gram per ton, and where 1.5, if you have 1 to 1.5% copper, we think it's now economic to look at its recovery. Certainly, it should be looked at in the feasibility stages of a project.
Okay, so it's interesting to me, as I'm coming at it from an investor's point of view, when companies talk and display that information, they talk about equivalent numbers. So not all equivalents equate to necessarily the economics suggested. Sometimes potentially.
Yeah, it depends on the form that you want to recover it in. You don't have to recover it as metal. You could recover it like some projects have looked at, recovering it as a intermediate, sulfide, lower capital cost, lower operating cost, but obviously a lower price. You don't get the same price for copper sulfide per pound as you would for pure copper, right?
Right.
Yeah, the copper gold concentrate can also be a good way to recover that value as well, if it can be smelted and you get the value for the copper and the gold in that case.
Interesting. When we kind of flip it on its head, and so you got copper companies talking about copper equivalent numbers, always sort of question, what the recoveries are on some of the other byproducts, whether the economics are really there. Raf, just with you talk really well about the kind of recycling, recovery, etc. An area you didn't quite talk about, but maybe it's implicit in what you do, is around remediation at the end point. I was worried about companies presenting themselves better, managing the kind of the negative side or the perception side of the narrative. So recycling recovery is good on the economics, but remediation, is that part of your remit, or is that something that you set the company up to be able to do better when the time comes?
Again, there are different pockets and different aspects being played around the world. As we know today, in most mining jurisdictions, when it comes to the old tailings impoundments, we cannot use what it was called the upstream construction method anymore, because it's prone to liquefaction. That is in Brazil after Brumadinho. There is that has been banned as well. It used to be banned in Chile and Peru since the 60s and the 70s. situations. So the point there is what they call decharacterization. We call it in North America decommissioning anyway. In Australia, we've been able to work together with some of our clients in making use of the real estate actually for urban development. Obviously, that has been possible when you're close to already established urban centers. And in some of our mining cities here in Canada, for example, you have tailings facilities like in the Sudbury Basin, in prime areas that could actually work, if proven that you have physical stability, they could be also used, not necessarily always for sub-developments, but for example for parks and recreational areas as well. So things can be done around old mining towns and have been done even in old mining jurisdictions like the UK. Have been created museums around mining. Now, I think that going forward, what we have to use is reduce the tailings going into the facilities themselves. And when I said reusing, is repurposing into other areas. In Brazil, for example, most tailings are coming from saprolitic ore bodies, and that was the example of talking about using them or converting tailings into fertilizers or some modifiers for the agribusiness. And that has, in some instances, reduced the tailings to nothing. They've been able to reuse or repurpose those tailings, and there are no more tailings facilities. I'm not saying that it's a silver bullet for everywhere. You have large producers of tailings in the Andes, for example, and you're not going to take those tailings down to, even if they can be used for construction elements, and they have cementants or some kind of way to producing civil construction blocks. You're not going to take them down to the coast, over an altitude difference of 4,000 meters or 5,000 meters. So everywhere it has different ways of dealing with them. The point is that, or the point that I'm trying to make for the industry, and we all at Hatch are as well in that endeavor, to make it sure that we plan, because sometimes these ideas are not coming with the business case at the beginning, but you should plan to maybe giving yourself the possibility of having a business case in the future as well, not just remilling tailings to produce silver instead of gold or something else in terms of precious metals, but making sure that you can open those possibilities for something else. Okay. That's where we are coming from in terms of reusing, repurposing, and probably, hopefully, bringing tailings, as I've said before, to almost not having an impact at all in the mine site.
Okay. And Vic, I'm going to drag you in here. It's quite easy for some companies to try and greenwash the messaging and try and control that narrative, but Nolene was talking about various cyanide processes. You're talking about chlorine gas and hydrochloric acid and nitric acid, and it doesn't feel very green. And it's very easy in terms of kind of lose control of that narrative. And you've mentioned a couple of over century old processes. And you've got to, and the companies, the refiners want to do this quickly. So these are very, 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 very strong solutions here. So how do we talk about a genuine green process in all of this? How do we answer that question? Oh, disabled video. Bandwidth too low for Vicar. We're not going to ask that question for Vicar. We're going to go back. Are you there, Vicar? I just can't see you. Can I hear you?
Yeah, I can.
Oh, you can. Good. Okay. Do you mind answering that question about, I don't know who pays for it, but is there a new process required to actually produce gold, which doesn't sound so aggressive?
So fully
I think we're not going to be
go all the wine.
Vicken, I think we're going to have to skip you. I think I think your internet is not delivering for us. So, Peter, if I can
not
go to you, what are your thoughts on the gold recycling on the industry as a whole?
Well, I think it's going to become more and more important. I think throughout all the industries, we're looking at circular economy. We're looking at recycling of value from everything, whether it's tails or lower value ores. I think we are looking at greener technologies throughout. Our biggest focus has typically been looking at ways to improve the green energy that we use in the process, and some of the ways that we can transport less materials. We can do things to improve the greenness of the overall process, but we are still typically dealing with chemical processes that do have inherent complexities as reagents and have to be managed and used safely.
Right. And Murray, what are you saying? Just let's talk about what the future holds in terms of the technologies being used, applied, not in terms of improving the economics, but in terms of improving people's perception of them. What have we got in store, Murray?
So for the work that I've been doing, let's say in the most recent years, last 5 years, sort of two developments. One is this ability to recycle water within the process and minimize effluent discharge. And I'm sort of speaking for Nolene now. If she was here, she probably would have again brought up the new water treatment technologies like reverse osmosis, which can now be done at a large enough scale. Like for example, the last project I was involved in, our effluent discharge was less than 30 cubic meters an hour, which is a fraction of what you would see in a lot of plants. And that's largely because most of the water was being recycled and retreated through an RO system, and they were using dry stack tailings. So that to me is a huge, leap forward in minimizing the footprint of the process facilities. And then also in our treatment of these complex refractory ores to stabilize arsenic and remove mercury, particularly those have been two big I think significant advances in processing technology. So that's where I see the future going, because I think more and more of the ore bodies, as I mentioned in my presentation, 50% at least are moving towards these polymetallic refractory sulfides, which need that kind of complex processing to make them not only economic but environmentally feasible as well.
Okay, and Ralph, what about you? What's the future hold, and especially in terms for tailings and residue management?
Well, I think besides what we've been talking to is keeping a very dear resource to us, which is water. So I would agree with Mary on that end. We've been trying to make sure that on the mine waste perspective, and I'm going to be talking about here, all the water collected at the site, starting with a waste rock facility, sometimes being hard rock or saprolitic, down to downstream of the plant with the tailing system. Make sure that every single drop of water, even in a positive water balance environment, is taken care of, because everything is impacted. And if it can be all taken care of within the site itself, I think that we are doing the industry a favor, first and foremost, I think, and I'm speaking to colleagues here, but to society overall, making sure that everything is more controlled and compact, and even open for secondary business cases, as I've said. So that's how I see the future, and the way that we are actually driving our purpose in the practice as well.
Brilliant. We haven't even had time to talk about amino acid use. Unless you've got something quick. Go on, Peter. Take us out. Amino acid. Yes or no?
I think there's a lot of development that's worth looking at. Typically, we see, all these alternate lixiviants are higher cost and more complexity for engineering. So I think the timeline is going to be out there, but there's a lot of potential. I think that's worth study.
Okay. Well, look, gentlemen, I think we're out of time. So Peter Lind, Eldorado Gold, Murray Pearson, Hatch, Raf Davia at Hatch, Nolene Ahern in her absence from SGS, and Viken Uppermanian. Thank you very much for your time today, gentlemen. Fascinating.
Thank you.
Thank you. Thank you. Bye-bye.
Thank you.